Without a doubt. Friday morning, PCE data, that's just around the corner, a few days away. Then you'll hear from Chairman Powell a few hours after that as well. Setting up the market, the price action this morning, equities are doing all right, up a third of 1% on the S&P. In the bond market, things shaping up as follows. Yields down by, let's call it a single basis point, 421.79. Lisa, you're calling it boring. Some people might say maybe it's just stable. Things have calmed down just a touch.
Well, this is where I would push back. If it was just stable, why the dramatic sell-off in things like NVIDIA last night, in the last half hour of trading? It doesn't feel like there is necessarily a ballast of calm as much as a lack of conviction. It is a different kind of moment that's fraught, I think, for the potential for some news to really disrupt things.
We'll ask that question to Keith Lerner of Truist. He joins us in just a moment, weighing in on the market resilience. We'll catch up with the former Fed Vice Chair, Richard Clarida, on the central bank's path forward, and VW North America CEO on the company's EV strategy. That conversation about 40 minutes away. We'll begin with our top story in markets. Stocks mixed as investors await the Fed's preferred inflation gauge coming Friday. Keith Lerner of Truist saying this: the equity market has been fiercely resilient since the rebound off the lows last October. Strong price momentum, like we have seen over the past 5 months, tends to occur in the midst of bull markets and is a sign of underlying strength. We still expect to see normal pullbacks along the way. However, we suggest investors stay with the primary market trend, which is up, and look to pullbacks as opportunities. Keith joins us now for more. Keith, 5 months of gains, that's what we're on track for. It's almost been uninterrupted. I think in that period, just 3 weeks of losses, and 2 of them came in the last month or so. Keith, why do you believe this can continue?
Oh, first, great to be with you. And as you've said, I mean, it's been an extraordinary 5 months. I would say, just looking back as a starting point, when we've seen 5 months of gains of more than 20%, we've only, or where the cumulative gain has been more than 20%, we've only seen this happen about 10 times since 1950. And a year later, you've been up every time with average gains of double digits. Now, to be fair, that's only 10 times, so that's just a starting point. The market on a shorter term basis is somewhat stretched. Sentiment's a little bit stretched. But in general, when you see strong momentum, like we saw late last year, like we saw breaking out of that 2-year range in January, and now this, those are things that tend to happen in a bull market, and the surprises tend to be to the upside. So again, I want to be also balanced insofar that, you know, historically, you've only had 3 years since 1980 where you haven't seen at least a 5% pullback. But if you're in a bull market, you stick with the primary trend and you look at those pullbacks as opportunities.
Keith, this hasn't just been contained to the United States. We've seen it in Europe. We've seen it in Japan. Are you more confident in the story at home or abroad?
We are still Team USA, Jonathan. We've been Team USA for several years. I mean, as you pointed out, we're seeing better global breadth, meaning we're seeing, you know, Germany, Spain, Italy, obviously Japan, which was, talked about a lot this morning, you know, at multi-year highs. So I think we're seeing a broadening of the overall market, but we still like the U.S. for several reasons. One is the economic trends. If you look at global economic revisions, the U.S. is still powering those upward revisions. Secondly, the earning trends are still much stronger in the U.S. relative to international markets as well. And the relative price momentum is also better. So for us to get more positive international, we want to see those earning trends start to flip. And normally those international markets do better when the dollar weakens and also coming out of a, major low or major, out of a recession. So again, we're watching. They're cheap. We think they've been cheap for a reason, but we're being patient before we shift that long-standing U.S. bias.
The U.S. bias being equity-focused, I wonder if that really applies to bonds as well. We were talking earlier about Andrew Balls of PIMCO, quoted in a Financial Times article talking about how he likes longer duration bonds overseas, not in the U.S., because that strength is also coming with perhaps a stickier inflation going forward. Do you agree?
We're still more focused on the U.S. I think in some ways, as you invest overseas in the fixed income market, there's also that currency component. And you get the big kicker both in the equity market and the fixed income market when the overseas currencies rally or the U.S. dollar weakens. Our view is more that the U.S. dollar is in a choppy range. We think the relative economic strength and maybe the Fed being somewhat slower will keep that U.S. dollar somewhat supported. So we would prefer to just stick with high quality U.S. bonds and the most liquid bonds still in the world. And we're still, even though they're staying pretty much in a trading range, you're still having the highest carrier coupon in 10-year treasuries that we've seen in about 15 years or so. So we want to keep it simple and just stay with the U.S.
We were just speaking with Amanda Lynham, and she said that really one of the big risk cases to her is if inflation remains sticky for longer, if the Fed is unable to cut rates, And that really does create a real problem, real questioning in just how much the Fed has the back of markets. Is that something that would shake your view as well if the Fed was forced to keep rates here simply because inflation and strength has just been so consistent?
It's a delicate balance. I mean, our motto really for most of this year is that we would prefer less rate cuts and a stronger economy to a weaker economy that needs more rate cuts. I think the environment that would be most problematic would be more of stagflation. We're not seeing that as well. I think if the Fed, if the market shifted from basically where we've been all year long is 3 rate cuts to no rate cuts, I think that would be problematic from a valuation standpoint. There would be some offsets, right? Why are they not cutting inflation? But also that likely means that earnings are also moving higher as well. So it's not just straightforward that the Fed doesn't cut rates and the market sells off, because earnings should stay strong in a nominal environment where economic growth and inflation stays somewhat higher. But I certainly think it caps the upside and likely probably leads to that, a gut check at some point in this market.
Keith, I've got no idea what happens in the future, but I do want to understand the past just a little bit if we can. Keith, we have priced out a load of cuts over the last 3 months or so, and valuations haven't come down. And I'm just wondering what the relationship actually is.
Well, there was an extremely close relationship for a while, whereas the Fed or the expectations for the Fed to cut rates came down, the market was moving up. That became unhinged earlier this year. And I think the reason why that is because if you look at GDP estimates on Bloomberg, right, you can see that the revision trends for GDP estimates for the U.S. continue to move up. And you also see forward earning estimates for the S&P make a record high week after week after week. So I think the market can still do fine as long as those earning estimates and GDP revisions stay strong. That will offset the need for those cuts. I think the market's also getting more used to these higher rates. And also, if we look back historically, we did a study, I think late last year, the average cash rate for the last 40 or 50 years has been about 5%. The average 10 years has been around 5%. And the equity market has done just fine in that environment, up double digits in general. So it's almost like we have this recency bias after the global financial crisis, when in some ways we've moved back to somewhat of a normal environment on the interest rate front. And stocks can do well in a nominal environment where inflation is a little bit higher and interest rates are back to more of a normal state.
Hey, Keith, do you believe this is sort of the old normal, a return to that?
It's a new normal, right? I mean, it's not the state we've been in since the global financial crisis. We're not going back to the 70s. So we're creating our new normal. But I think in some ways what was really more abnormal was really that last decade. And maybe it's somewhere in between those two different phases. But I do think that economic growth is probably going to be a little bit higher than following that post-financial crisis. I think inflation just stays somewhat higher as well. And I also think valuations for the market, they're elevated by any metric. That's a risk, but it's not an apples-to-apples comparison either there. In 1990, the technology sector was about 5 or 6% of the S&P. Today, it's 30%. So, and those sectors tend to have higher multiples as well. So again, history is, it's not always an apples-to-apples comparison.
Before we let you go, Keith, I want to just circle back to something that we've been talking about a lot over the past couple of weeks and that came into real clear focus yesterday. Even though we seem addicted to our phones, we're very much living in a physical world, and the nuts and bolts that haven't necessarily seen the same kind of investment. How much are you sort of trying to ride the industrialization wave or the reindustrialization that we keep hearing about that's been part of some of the commodity story that we see playing out?
No, it's a good point. I mean, we've been overweight tech and communications and financials. Our work is starting to be somewhat more favorable towards some of these deeper cyclicals. And I think if you think about like the industrial sector, it's at an all-time high. It made that all-time high right alongside technology early on. If we look at a lot of these infrastructure bills, a lot of that money is hitting now as well. So I think if you think about the next 5, 10, even longer than that, I think this industrialization, this onshoring, has long legs to go, and I think that will be an attractive area of the market for some time.
Hey, Keith, good to get your thoughts. An update from Truist. Keith Lerner there of Truist. Thank you, sir. Appreciate it. On the growth policy mix, the optimal mix at the moment, and why this equity market rally can continue, perhaps through to the end of this year. Equities right now still rallying. Least are positive by 0.38%.
Yeah, although coming off just a couple basis points. Let's get you an update on stories elsewhere this morning. The search and rescue operation after the collapse of the Francis Scott Key Bridge in Baltimore is now a search and recovery mission. A road crew was working on the bridge at the time of the collapse. 2 people were rescued, but 6 remain unaccounted for. The area remains closed off to traffic, cutting off a major artery around the city. Chinese President Xi Jinping has told a group of American business leaders in Beijing he wants U.S. companies to invest in China, putting aside differences on, quote, minor issues. Xi met with leaders including Blackstone's Steven Schwartzman and Qualcomm's Cristiano Amon for more than 90 minutes. China is seeking to restore confidence in its economy, with Xi acknowledging issues with the domestic economy, but saying it hasn't yet peaked. Trading platform Robinhood is rolling out a credit card as it looks to further push into the consumer market. The Robinhood Gold Card will be offered exclusively to members of the company's subscription-based Gold investment suite. Members won't have to pay annual or foreign transaction fees and will receive 3% cash back on all purchases. That's your Bloomberg Brief. John.
The goal is for all our customers to hold all of their assets in Robinhood and for all of their transactions to go through it. It's a pretty good goal, isn't it?
Okay, just taking a step back.
I'm not going to say whether that's achievable or not.
Well, I just want to say everyone wants to be a credit card company, whether it's the airlines or whether it's Robinhood. That's number one, even at the time of some potential pushback in the antitrust market. But number two, how much is this gold card going to help to fuel the 0 days to expiration options market that people say is fueling a lot of the volatility in markets? I mean, this is a great story.
Are you saying this is an additional line of credit to buy stocks? Is that what you think this becomes?
I'm just saying, cash back, where does it go? It goes directly back into 0
the stock
days
market
to
and the
expiration.
vibrancy of American capitalism, which is exactly where that money should be recycled.
You think so?
Absolutely.
Rather than the physical world?
No idea. Up next on this program, Baltimore's bridge collapse, straining supply chains.
It's a large port with a lot of flow through it, so it's going to have an impact. We'll have to divert parts to other ports along the East Coast or elsewhere in the country, and it'll probably lengthen the supply chain a bit.
A conversation coming up next, live from New York City. This is Bloomberg.
Was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Rain World Cup. This is a 3
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Live from New York City, about an hour and 13 minutes away from the cash open in New York. Equity futures positive by a third of 1%. Bond yields a little bit lower, down a single basis point, 421.79. And in the commodity market, Joe Biden needs some good news fast. $81 on WTI, we're down 0.7% for the president. AAA warning, $4 crude at the pump this summer. Under surveillance this morning, Baltimore's bridge collapse, straining supply chains.
It's a large port with a lot of flow through it, so it's going to have an impact. It's just at this point, we'll have to understand what that means for us specifically. We'll work on the workarounds. We'll have to divert parts to other ports along the East Coast or elsewhere in the country, and it'll probably lengthen the supply chain a bit.
Here's the latest this morning. The Port of Baltimore now closed indefinitely, threatening to disrupt the transport of 2.5 million tons of coal and shipments of Ford and GM cars. The port is the second largest terminal for U.S. exports of coal and handles the nation's largest volume of automobiles. John Katsonis of Breakwave Advisors saying the situation will, quote, create disruptions in global trade, some that will be felt in the U.S. market, given the importance of the Baltimore port when it comes to importing cars and consumer goods. John, I'm pleased to say, is with us around a table. John, good morning to you.
Good morning.
I'm sure you've been super busy in the last 24 hours. Something we haven't done enough, nearly enough, I don't think, is really explore how big the ships are. And I know this is something you want to speak to. We're talking about something that is almost 1,000 feet long. And when you hear things like it's traveling by close to 10 miles an hour, it doesn't sound like that's that fast. You should be able to slow it down. Could you give us a better framework to think about the size of these ships and the kind of forces involved?
Absolutely. I mean, people have to think these are huge structures. Tens of thousands of tons that travel. The momentum for these structures to stop could take 10, 15 minutes for the moment you lose propulsion. So people, when they see the ship hitting the bridge, the engines have stopped way before, minutes before. It's not easy to really stop this at a moment's notice, like we're used to, with our car, for example. The other thing is obviously when this happened, a lot of the procedures were followed the right way. I mean, the ship through the anchor, for example, tried to slow down the momentum, right? They tried to route away from the pilot. But it is not something, I think it's more of the timing. The timing was really bad when this blackout happened. If it had happened like a few minutes later or before, this wouldn't have happened.
As an observer from the outside looking in, when you see the lights go off, come back on, go off, come back on, and black smoke starts to come out of the bag, what was it that you thought was going on at that point?
Well, I think what people are doing in the bridge, trying to figure out what the situation is, right? They see suddenly things are not responding the way they should. Probably the emergency generators or the emergency system didn't work, or they were malfunctioning. I mean, I'm pretty sure there was a lot of attending to solve the situation, and they did the right thing, right? They called the authority and they said, you have to stop the cars, right? So they did the things that they should have done. Probably, we don't know exactly what the situation was, but that's what we would imagine. But there's not really an easy solution. It's a timing more than actually what happened. I mean, a lot of ships get under these conditions, but you never hear about it because it's not in a bridge or in an area that affects anything. So it's not unheard of, but it's a timing.
When we talk about risk controls, some have postulated that maybe this is a result of dirty fuel. Does that ring true to you? Is there sort of a theory that you see as something that's more common for some of these malfunctions in the past that could be at the heart here?
So contaminated fuel could be the reason, and it's something that you hear in the shipping industry. I'm pretty sure that it's an easy way to find out. You can test the fuel. And I'm pretty sure that the investigators will find that. But yes, that could be one of the reasons. One
economic consequence people have been talking about is that even a 10% increase in capacity in flow to New Jersey, New York, Virginia ports will cause the same kind of backlogs that we saw during the pandemic. How concerned are you about that kind of additional traffic will cause ships to have to wait out in the harbor to get unloaded and to get sufficient dock workers to get it all done?
So the good thing is that we're in a slow shipping period, right? We're not in the Christmas period or pre-Christmas period. Right now is a slow shipping period, especially for consumer goods. So that's a positive. But you're absolutely right. I mean, the 10% sounds not a big number, but if the ports of New Jersey or down to Norfolk, Charleston, Savannah are already close to capacity, that can really create a situation there. And I think that's something that you cannot really gauge, you cannot really measure. Also, probably the West Coast can take some of the cargo and then rail it to the East Coast. That definitely increases prices, and that's part of, I think, the effects you might feel on the consumer side. But I don't think that is as, in terms of size, it's not going to be anything close to the pandemic, right? We're not talking about anything like that. But keep in mind, this comes on top of what's happening in the Suez Canal and the Panama Canal. So this is not like an isolated incident, because if it goes by itself, then it's not a big deal. But you have the Suez Canal, all the divergence around Africa, and then you have the Panama Canal, where you don't have enough water for the ships to transit, at least not to the rate that they used to.
This ship was built in Korea. We hear a ton of protectionist policies and rhetoric coming from Biden and Trump ahead of November. You don't hear it about shipbuilding. The U.S. doesn't make ships anymore.
Well, they do, but it's like 3 times more expensive. So it's not, I think it's a cost issue. It's not really, you don't do that, and you cannot compete in a protective economy in the shipping industry in the U.S. So that has been going for decades in the U.S., and everybody either complains or try to protect the industry, depending where you are. But I don't think that's an issue. I mean, Korea built very high-quality ships. This is a new ship, high-quality built ship. It was maintained well. I mean, it's not really something that I think the focus should be in.
Given all your experience in this space, what do you think the timeline is for the cleanup and the rebuild?
So if you go back like 20, 30 years ago, a similar incident happened down in Florida. It took 7 years to rebuild the bridge. When you talk about that, I'm not a structural engineer, but that's something to think about. Reopening the port, my personal view is that it's going to take months. People talk about a few weeks, but if you see, everybody can see the structure and how much steel is in the water. Think about the salvage operations. How are you going to build this? How are you going to bring these barges and cranes to take all this steel out of the water? And then, of course, to salvage the actual ship, take the containers that were broken in the water, the cars. So I think it's going to be, longer than what most people think.
You've been an investor and analyst for more than 2 decades, I believe, 20 plus years. I'm trying to understand where the liability might sit. How are you thinking about that at the moment? The president's come out and talked about using federal funds to rebuild all of this. But as you think about who might be responsible for this, where would the liability sit and where would the insurance be?
Well, I mean, if you take the whole cost of this, is running to multiple billions. I don't think there's going to be anywhere close to that for whoever was responsible on the shipping side. Obviously, the P&I clubs will get involved. I think it's a much more complicated situation than just an accident, a shipping accident, because it's very rare that the shipping accident affects actually ordinary citizens or a structure that is standing there idle. So if 2 ships collide, then it's very simple. Let's say not simple, but is easier to understand where the liability stands. Here you have like a sitting structure and a ship hitting this structure. So it's totally different. I think a lot of different parties get involved on the shipping side, but also on the actual, commercial side, call it.
John, this was thoughtful stuff. Love to do it again sometime soon.
Thank you for having me.
Because this is going to be an issue that lingers for a long, long time, Lisa, as the cleanup effort continues.
And as John was saying, it's not an isolated incident in the sense that we're seeing other shipping disruptions, which just raises this question, how is it going to be felt?
John Katsanis there of Breakwave Advisors. Coming up next on this program, do not miss this, the former Fed Vice Chair, Richard Clarida. He said last year this Fed would be willing to accept 2 point something on inflation. Are they willing to accept just that?
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
That threat of higher rates potentially is pretty credible, because based on what we heard last week, you just know what the bigger priority is. And I think that's what stands out for me. The ultimate priority is that we've got this once-in-a-generation opportunity to reset inflation expectations higher, and we don't want to undo that. We're willing to take negative rates away and go back to zero. But if you think we're going to go on an aggressive tightening cycle anytime soon and undo what's taken decades to build, you're wrong. The priority is on something else.
I'm wondering if Japanese finance ministers are getting on the same page as Bank of Japan members, because at the same time that we heard this from the finance minister, we heard this from a Bank of Japan member basically coming out and saying that the central bank must proceed slowly and steadily toward normalizing its ultra-loose policy. They're not singing from the same hymnal that the finance department is.
Yeah, the currency is just not the priority at the moment in the grand picture of things, the big picture. 151.26 on dollar yen. Under surveillance this morning, fallout from the Baltimore Bridge collapse continues. 6 construction workers are presumed dead, but authorities are resuming recovery efforts and conditions improve. Cargo is being diverted to other major U.S. ports along the East Coast. Maryland lawmakers are pushing for an aid package to help rebuild the bridge as President Biden calls on Congress to approve federal funding, which begs the question, Anne-Marie, how quickly that's going to take.
Well, one is that you have officials on recess, Jonathan, but then, of course, there's going to be an immense amount of pressure for them to secure funding, to rebuild and help this port. Kaylee was just in a gaggle with Governor Westmore, and she wrote to me that what he's talking about is that he's working with state government and federal congressional delegation to make sure that they are able to get that funding and also support those Maryland workers that rely on this dock for support. And if that dock's going to be closed for a while and that port's going to be closed, you're going to have an issue of this local economy.
Look for more reporting from Kenny Light throughout this morning. Our next story from the FTC. They've been investigating TikTok over alleged faulty data security and privacy practices. Politico reporting that the agency could decide to bring a lawsuit or settlement against the platform in partnership with the DOJ. FTC officials accusing TikTok of deceiving users by denying that individuals in China have access to user data. The FTC and DOJ are reportedly holding discussions about next steps, including civil penalties. The case is unrelated to the for sale bill that's now stalled in the Senate. But you imagine the Senate and senators will begin to lean on whatever comes out of this, Lisa, sometime soon.
Exactly what I was going to say. That basically national security was doing a lot of the heavy lifting, and now it's actually doing the entirety of the lifting through the Department of Justice. Is this the avenue that will be the quickest way to get there, given how many hurdles we've talked about with getting through a sale or some sort of divestiture?
You raised the question about Europe in the last week and data privacy. The focus was on Apple and what's happening with Alphabet and all the other tech companies. What's going to happen with ByteDance, with TikTok in Europe too?
Good question. And honestly, how worried are they about the potential data breaches, and how much does the U.S. and Europe get on the same page at a time where there are other differences having to do with certain, antitrust issues that Europe has raised about the U.S.?
Senators may now rely on the FTC, but actually this originated from Senator Warner and Rubio in July of 2022, writing a letter to the FTC saying you need to look into this, and now it's come full circle.
Very circular, everything down in Washington. Let's turn to the Fed speak. Continuing today with Governor Waller, set to deliver remarks at the Economic Club of New York. On Friday, you'll hear from the San Francisco Fed President Mary Daly, speaking ahead of Chair Powell himself. Their remarks coming after the Fed's preferred inflation gauge, PCE, is due out 8:30 Eastern Time on Friday. Bloomberg Economics expecting core PCE to rise the most since September, backing the Fed's patience on rate cuts. I'm pleased to say that we're blessed with the presence of the former Fed Vice Chair, Richard Clarida. Rich, it's good to see you.
And I'm blessed to be here.
Oh.
Thank you very much. I've been singing your praises for the last week because I was thinking back to the secular outlook from PIMCO in the middle of last year, where you and the team wrote down this Fed will accept 2 point something. Can you describe what you were looking for back then, what you saw, and whether it's starting to come your way?
Well, John, I think it has played out. Look, I think Chair Powell and the committee deserves enormous credit. Inflation got up to 5.5% or 6%, maybe 10 on headline. It's now running in the twos. Our view then was 2 point something would be the point at which the Powell Fed would start to pivot towards easing. I think they think they're done. I think they're signaling that they're going to be cutting starting this year. I think it's important to remember the goal is to get to 2%, but they're going to start cutting before they get to 2 based upon their view that financial conditions are tight. So we'll see how it plays out. But I think so far that's played out like we thought.
A phrase you've used is opportunistic disinflation. Can you help me explain the difference between what you see and maybe what others see when they start to say things like, and I was talking about it on this program, a higher tolerance for inflation? What's the difference?
I don't think John, I don't think there's the tolerance. Opportunistic inflation actually is something that folks thought the Greenspan Fed did 30 plus years ago. That as you tighten policy, you get inflation close to where you want it, but for that last mile, you just wait till the next recession to get it done. And that could well be what we end up in this cycle. That is, the rate cuts will start before you get to the long run goal of 2%. And at some point, there'll be a downturn. Inflation can fall further then. The tricky thing is, of course, the Fed wants to avoid the downturn in the first place, which means at minimum, Chair Powell will have some communication challenges ahead, I think.
Well, there's a lot to unpack there. Just let's start on the first issue, which is something that Andrew Hollenhorst was talking about earlier this week, that essentially you cannot get down to 2% without a recession. Do you agree?
Well, I think historically that's what you would say. But look, the progress has been remarkable. You mentioned Governor Waller, big fan of Chris's, worked with him. You know, Chris has been making the point you can get back to 2% without a lot of unemployment if vacancies are cut. So I don't want to say that you can't get there, but it could be a heavy lift, yeah.
Well, and the other part of what you said is really important. The Fed doesn't seem to want that weakness. And they even said that they would cut rates in response to a weakening labor market.
I noticed that, yeah.
What does this mean for the longer term inflation rate? Does it mean that 2 point something is the floor? And kind of we could see sort of bouts of volatility in inflation in the upcoming years?
I think that is a risk case. I think the progress on disinflation is remarkable, but inflation's still above where they want it to be. And there's some evidence that it may be more sticky and stubborn than folks were thinking. Again, I'll let the data speak for itself. I hope the Powell Fed really is data dependent. I think they need to be open to the possibility that inflation is sticky, and I think that changes their communication and the rate path.
Can you help us understand an inconsistency that we struggled with last week and again on the program this morning?
Yeah.
We caught up with Bruce Kassman at JP Morgan.
Yeah.
It was brilliant, and acknowledged the difficulty in explaining the following. When the Fed is asked if we're sufficiently restrictive, Chairman Powell will often speak and point to the labor market, then simultaneously embrace and confirm that a lot of the improvement came from the supply side. Now, I'm trying to understand whether you can really point to the labour market as a sign you're sufficiently restrictive and also acknowledge that a lot of the improvements come from the supply side. Can you do those two things at once?
You can. I think, look, there has been improvement in the labor market. Wage inflation has stepped down from 5.5% down to around 4%, but that's still a little bit hot compared to where they want to get. But the chair is right. There's been important supply side benefits, in particular labor supply. Productivity is also picked up. I actually think, John, if I could, I think maybe a little bit more of a disconnect is on the financial conditions predicate itself. If you just look narrowly at the federal funds rate, it's well above inflation. That looks very tight historically. But of course, very few people, including banks, borrow at the federal funds rate. If you look at mortgage rates and you look at other things, they've come down and credit spreads are tight. Bloomberg financial conditions indexes, including Bloomberg's, are easing. And so he got that question last week about financial conditions, and he says, we think they're tight. Well, they could be, but they're certainly easier than they were in November. So,
what do you think he's pointing to when he says we think they're tight? What is he pointing to?
Well, absolute borrowing costs. If you want to get a car loan, if you want to get a mortgage rate, so traditional indicators of the cost of borrowing are elevated, but obviously other indicators are moving in the other direction. So as usual with the data, it's probably a mixed picture.
Do you think that it's clear that it is truly a sufficiently restrictive rate currently at the Federal Reserve?
That would be my base case, but there is a risk that it's not. And I think, importantly, the focus on the baseline, of course, is reinsuring. We want to know what's going to happen. But I think there is a risk management case here where it may not be restrictive enough. I think the Fed's view, I don't think people care what I think the Fed's view is if inflation's stickier and more stubborn than they want, they'll just keep rates at the current level longer, or they'll reduce the pace of rate cuts. I don't really think the Powell Fed is thinking about hiking anymore right now. I think they think they're done.
You said if the Fed really is data dependent, and I don't think you're necessarily casting doubt on whether they look at the data, but what data matters most if what we're looking at right now is inflation data that is coming in hotter, and frankly, goods disinflation that seems to have ended?
Certainly the January and February data, if the PCE comes in, that would be the reason. There is some evidence, and I think the chair is correct, of seasonality. That's always tricky. And in recent years, most of the bad news in inflation has been in the first 4 or 5 months. So I don't think we want to remove that possibility. I just think that a sticky inflation scenario is maybe not a baseline, but it's a very realistic case. And I think investors and people looking at the economy need to start thinking about it.
How do you perceive the balance of risks? Holding too long or cutting too soon? What is the bigger risk for you?
Well, I'm no longer there, so it probably doesn't matter. I think given that the last 3 years, inflation has substantially overshot the target. Look, I was a charter member of Team Transitory. It's looking better now than it did like a year ago. But I think there is path dependence and history dependence in monetary policy. And so I think the risk management I would be doing if I were there would say there is a real, we want to avoid, we want to avoid having inflation shoot up again and having the credibility challenge. So I would be leaning more in a hawkish balance of risk mode than just hugging the baseline right now.
To put sort of a bow on that point, if you think about how much more investors have to consider the idea of sticky inflation and Fed officials themselves, can you give us a sense of how much that possibility has increased in your view in the past month or two based on the loosening of financial conditions and frankly, the Fed's response to it?
It has increased, certainly. Look, we got 5 out of 6 months of really good, surprisingly good inflation data, and for good reasons, both supply and demand. Where in some ways, I think there's actually now, compared to where we were maybe in January, a better alignment between markets and the Fed in the sense that, after the December meeting, the markets have priced in 6 or 7 cuts, which was a disconnect with what I thought the Powell Fed would deliver. So on that end, I don't think there's too much of a disconnect. Now, I think markets understand, they think they're done. The margin that they're going to play with is when to cut and how much to cut, but not to hike. So I don't think there's that much of a disconnect right now.
One final question. Can we do the show again in Newport Beach, California? Can we do that in June?
Excuse me? Well, it's above my pay grade, but And I'll treat you to a burger like I did. Actually, you
I'd love
treated
to.
me, or
Did
no
I
one
treat
treated
you?
each other.
No, I think we treated each other.
We treated each
I think
other,
that was
okay.
it. I think sort of Manny and Mike exchanged cards or something like that. Rich, it's good to see you. Thank you, sir. Thank you very much. The former Fed Vice Chair, Richard Clarida. Equities right now on the S&P 500, Lisa, positive by 0.4%.
Let's get you an update on stories elsewhere this morning. 6 people are presumed dead after the collapse of Francis Scott Key Bridge in Baltimore. President Biden saying he wants the federal government to pay for the rebuild, with the governor of Maryland telling reporters it's critical they act quickly.
This is not just impacting Maryland. This is impacting that farmer in Kentucky. It's impacting that auto dealer in Michigan. And so it is imperative that we get this bridge rebuilt. It's imperative that we get the Port of Baltimore back up and going. And it's not just about how are we supporting Maryland. This is about how we're supporting the American economy.
Meanwhile, Brent could hit $100 this year if Russia's decision to cut production isn't balanced out by other countermeasures, this according to analysts at J.P. Morgan. The bank saying the actions could see the price of oil hitting $90 next month and close to triple digits by September. Russia saying its decision to deepen its production cuts were based on expectations for global oil demand growth. Trump Media and Technology continuing to surge in pre-market trading. The stock ending the day 16% higher after rising as much as 59%, I should say, on his first day public yesterday. The stock adding to the former president's net worth on paper. Trump's 60% stake may now be worth more than $6 billion based on SEC filings. However, Trump cannot sell his stake immediately due to a 6-month lockup agreement, which raises questions, John, about whether this is actual wealth, whether this is paper wealth, whether he can cash out, what this means. All I know is that to short that stock is incredibly expensive, and a lot of people are piling in.
Yeah, very risky, I'm sure, as well.
On every level.
I think the real date on the calendar you should look for is maybe not the end of the 6-month lockup. Get back into power and sell it tax-free, right?
Is that what you are
That's
on
what I
this
would
tax?
do if I got back into office.
The tax mitigation policies that you find interesting.
Absolutely.
Sort of like
I
Jamie
think
Dimon.
That's the last remaining attractive thing about working in Washington.
Is this your pitch to people?
In the US
This
government.
is why executives should do it.
I can't
You
think
just
of
tax
another
rate.
reason
That's absolutely
why
incredible.
you'd want to go.
How about
But he
oil
might need to
service?
cash out to get that money so
To
he can
borrow
actually
against
become
it?
president.
That's so cynical. What about serving the great country?
Yeah. How many people want to do that now, given what's happening in Washington?
Jamie Dimon.
Think about the message that has come from the people who have left in the last week. We had a Republican recently who talked about messaging bills, how he was sick of it, you
Mike
can't
Gallagher.
get anything done. Go back and listen to what Mike Gallagher had to say, and I think that's a sad indictment of how people feel about serving in Washington at the moment.
I really would like to get back to an era, especially not necessarily the high level, but rank and file, where it is something of an honor, and that's all that we all can hope for.
Here, I'm with you on that point. Up next on this program, EV makers facing demand pressures.
In terms of the EVs, the growth is there in the market. Perhaps the consumer moving into the EVs is at a slower pace than what some had dreamed about, but the growth is there, the interest is there.
That conversation up next.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
The opening bow 42 minutes away. Equities doing okay on the S&P 500. Positive through most of this morning by around 1/3% to about 0.4%. Under surveillance this morning, EV makers facing demand pressures.
In terms of the EVs, the growth is there in the market. Perhaps the consumer moving into the EVs is at a slower pace than what some had dreamed about. But the growth is there, the interest is there, consideration is growing, and once people have driven EVs, they are very loyal to that type of powertrain, and so we think we will be seeing a steady growth in the market.
Here's the latest this morning. Growing EV demand concerns are forcing automakers to scale back production, with some making a pivot to hybrid vehicles. In China, shares of BYD falling in Hong Kong, trading after the EV maker's earnings missed estimates amid aggressive price cuts. Competitor Volkswagen saying it expects to fall behind in China. Quote, along with our value over volume growth strategy, we are deliberately prepared to give up market share in order to find a sound compromise between margins and volume. For more, Pablo Desi, Volkswagen Group of America President and CEO, joins us now. Pablo, good to see you.
Good morning.
Thank you for coming into the studio. I know it's an important couple of days for you and the team here in New York City. I just want to reflect on the events of yesterday in Baltimore, important hub for automakers. Can you walk us through the potential disruptions for you, the team, and the company?
Yeah, first of all, regarding yesterday, our heart goes to the families. Yeah. It's quite unfortunate that everybody's looking at this. From a business point of view, we are on the side of the sea level. So, you know, when the ships come into Baltimore, we're not going to be affected by this event. Obviously, we're going to have some disruption because of the trucks, but it's not going to be as disruptive as other automakers.
Supply certainly hasn't been the problem in this industry. Unfortunately, it's been demand. Can you walk us through where you're seeing things weaken, where you're seeing things strengthen, and whether you're able to lean into what's happening with hybrids and the demand for it in America?
Absolutely. So let me start talking about the industry. February year to date, the demand is very strong as an industry. The North American market, which is Canada, US, and Mexico, grew 8% February year to date versus last year. And we grew 21%. So we're tripling the growth of the market. But still, 8% is quite strong. And what we're seeing, the data from March, is still strong. Having said that, the EV has flattened. The curve remains around 7.5%, 8% of the total industry. But we as VW, we still have 12% of our sales are in the ID4, in the electric vehicle space. So we're still having higher growth than the average market.
Do you expect to ramp it up, though, more slowly, and maybe put a greater emphasis on hybrids? Are you starting to sort of sow the seeds for that right now, because you have a couple of years or potentially months to really get that up and running?
Yeah, so our factory is highly localized in the U.S., and we have both combustion engines and electric vehicles in Chattanooga, in Tennessee. And we're the only foreign automaker that qualifies for the $7,500 credit for the consumer, which means that we're localized within the region. So that gives us our flexibility. Going forward, I think the pace of growth will be slower, but we'll still grow in the EV space. And other powertrains will be a good alternative for the consumers. So the consumers will be able to choose electric vehicles, plug-in hybrids, and combustion engines.
How important was that subsidy to you, to not only build a factory, but also just in terms of your decision of the product mix to sell?
Well, first, I think the IRA, the Inflation Reduction Act, is a great piece of legislation for the U.S. because it is transforming the industrial base of the U.S. So you see all these new factories and battery factories being built in the U.S. over the next 3 or 4 years. So the benefit is not only for us, but also for the consumer. You know, by the fact that we're localizing and we're bringing all the jobs of Volkswagen and also the suppliers, you know, we create an ecosystem that provides more jobs here, and then the consumer gets a $7,500 credit.
If Trump were to come back in power, though, he can rewrite those Treasury laws, which makes a subsidy, which could make the subsidy basically impossible to get. How are you thinking about that kind of impact when all this money has been put towards the EV market?
Yeah, so we have a long-term vision on these topics. I mean, we know that, and we believe we remain committed to the EV strategy in the long term, and the pace will depend on the consumer. Now, is it possible that the rules will change? It's possible, but he would need a vast majority in the Congress and the Senate to change his laws. And also, when you look at the map where all the factories are being built, they're not built only in states that are Democratic or Republican. They're being built all over the U.S. I think, you know, in the interest of jobs and growth in technology, I think it would be wise to maintain this long-term vision.
Do you think it would be wise to wait until after the election before you make decisions about your manufacturing footprint in this country?
I don't think so. And I'll give you an example. And these are not only words. We decided to localize the ID4 way before the Inflation Reduction Act, which goes back to your question, right? So we believe so much in the transition to electric vehicles and in localizing our footprint in the US that we made decisions before and after that we're going to continue to localize.
One push over the last year or so by this president, by this White House, is to push and support union workers. You mentioned Chattanooga. At that plant, there's going to be a vote on whether the workers join UAW, that specific union. Can you walk us through what that could do to your cost base?
Yeah, first of all, we respect the freedom of our workers to choose how they're represented. Having said that, we're constantly talking to our workers on how to improve, the working conditions, the salaries, and the benefits. It will be up to them how they want to be represented in the future. So we will respect that.
And the cost base? Would you just assume it would increase off the back of that?
I'm not so sure. I mean, we have a very competitive cost base, competitive in terms of the employees. We have wages around $23 an hour, which are comparable to Michigan with a lower cost of living. So we will see.
Pablo, thank you, sir. Hopefully we can catch up again soon. Appreciate your time.
Thanks for the invitation. See you next time.
Pablo de C, the VW North America CEO. Let's set up tomorrow. Tomorrow, this is what the program looks like. We'll catch up with the Kia COO. The conversation around automobiles will continue. DHL Supply Chain CEO Oscar de Bock will join us too. The Merck CEO Robert Davis and Tiffany Wilding of PIMCO. A lot to get into, Bramo, regarding industry and global business.
Especially at a time of so much change. And really what we've been hearing is consistency is all that really matters. And that, going forward, that they can adapt to any possible shift as long as there's some consistency.
The opening bell about 35 minutes away. Equity futures near session highs, positive by almost 0.5%. From New York City, this was Bloomberg Surveillance.
Welcome back to the Miami Open update for Bloomberg TV and radio from Tennis Channel. Third seed Daniil Medvedev had to muscle his way past Dominic Kepfer to reach the quarterfinals. The defending champ fought back from 4-love down in the opening set breaker to take an early lead. From there, it was all one-way traffic as Daniil dominated the German from the baseline. Medvedev is looking very, very good on his favorite surface in Florida. And don't forget, Tennis Channel's daily live coverage starts at 11 a.m.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal. That deal. The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Wow.
From New York City, for our viewers worldwide, a very good morning. I'm Manus Cranny in for Jonathan Farrell. This bullish juggernaut in momentum continues as the drugs company Merck up 5% on an FDA approval. The rally endures. Countdown to the open kicks in right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrell.
Show. As I say, futures edge high. The S&P 500 eyes 5 straight months of gains. Traders brace for the Fed's preferred inflation measure. What is the tolerance for a hot PCE? And from cars to coal, Baltimore Bridge collapse disrupts trade. We begin with the big issue. Those stocks, they've got their turnaround.
It doesn't pay to be bearish, right? The data is way too good. You've got to stay bullish, and you've got to stay bullish on equities.
This is among the most record-setting periods of momentum that we've seen.
We don't have a Mag 7. We've got a couple stocks really driving it.
What we've just started to see, and I think this accelerates as we go through the year, is the rally broadens out.
We're still in a bull market, and I think you stay invested.
Well, RBC's Laurie Calvasina writes this. We continue to see sentiment as stretched. We think the U.S. equity market pullback is overdue, but the risks of a melt-up, particularly given the dovish Fed meeting, the rapid increases in 2024 GDP that are underway, have admittedly grown. Laurie joins me now alongside Allspring's George Bory. Good morning to you both. Laurie, good morning. It's a juggernaut. It's a momentum juggernaut that just seems to be unstoppable at the moment. What would materially flag stretched to you? Good morning.
Hi, so thanks for having me. And look, I think the sentiment indicators are what have us worried tactically a little bit in the short term, though frankly, they've been worrying me for a few months. I would keep a close eye on AAII net bullishness. It's been hovering around 1 standard deviation above the long-term average. When we wrote that sentence you just highlighted, one of the things we had in mind is that that indicator sometimes does go to 2 standard deviations, not all that often, but occasionally. And we think the risks that that particular indicator may see that 2 standard deviation mark before all this is said and done have risen. It's not an absolute, but the problem with that is when you do go to 2 standard deviations, stocks are typically down over the next 12 months. When you're at 1 standard deviation, stocks are typically flat over the next 3 months and then up a tiny bit over the next 6. Or over the next 12 rather. So I think that where we are right now makes the case for a short-term pullback and then getting back to business with the rally. But if we do have that melt up, it might be giving us more of a negative long-term signal down the road.
Okay, well, there's miles to go. Laurie, stay with me. George, good morning. You said it started so well. It was the perfect Goldilocks scenario for the bond market. Then, of course, you had that slight of warmer porridge with the PCE disrupting the January and February momentum. This tolerance or this building narrative that we've all got, we just had Mr. Clarida on surveillance a moment ago talking about the tolerance for slightly higher inflation from the Fed. Do you buy that?
Yeah, good morning. Thanks for having me on the show. We've had a long-standing view that it would be very difficult to get inflation all the way down to 2%, and that the true natural rate of inflation in a developed economy is much closer to 3 than to 2. But policymakers need the market to believe that they are willing to get inflation down to 2%. And it's really that market confidence that we think the Fed, has both done a good job managing and does seem to be, at least on the margin, kind of willing to start to test the market's sort of willingness to accept, perhaps more of a range of for inflation rather than just a point estimate that they're determined to drive to. So we do think, sort of markets are, pretty dynamic, bond markets in particular. The long-term sort of inflation expectation numbers are still fairly well anchored, which to us, is a strong vote of confidence, both for what the Fed's doing today, where rate policy currently sits, and then sort of what the Fed has guided the market to expect. So while, inflation is certainly a little bit higher, well, a fair bit higher than target, it is sort of pointing generally in the right direction in that it is very slowly coming down. And as long as that trend persists, we think that should work to the benefit of bond investors.
George, are you uneasy in any way when you look at the 5-year break-evens cascading higher?
Uneasy at that they might cascade higher, I suppose. I mean, we do watch, obviously just sort of the near-term inflation indicators pretty closely to determine, sort of what's the trajectory. We, like everyone else, sees upward creep in sort of super core prices, but broader context, when we look at, say, kind of manufacturing or goods prices still coming down while services go up, to us tells us we're very much in a transition phase where the economy is sort of shifting in a fairly dynamic way. There is still clearly some price sensitivities within the economy, but on a more broad-based basis, we do expect inflation to remain fairly well behaved as we go forward. And, we think that while you could see some upward drift in some of the break-evens, we don't expect a meaningful breakout. So from that perspective, no, not panicked.
Okay, it's good. It's good to know that you're not panicked, Laurie. The issue for you very clearly say we're priced to perfection. You put your hands up for the melt up in 5,500. I just wonder how much of that narrative would or possibly be interrupted if the Fed scales back to 2, or even in a Bostic scenario, just does one cut. Excuse me.
So look, I think from my perspective, if we were to sort of dial down the pace of cuts that's expected or the number of cuts that's expected, with sentiment sitting where it is right now, we're looking for the potential for some sort of trigger, right, to come in and kind of take a little bit of froth out of this market. So could that do the trick? Absolutely. We, though, frankly, did dial down Fed expectations a good bit earlier this year, and that didn't seem to make a dent. But there aren't a lot of potential negative catalysts out there. So I think that's one that you have to keep on the radar.
Now,
from my perspective, though, when I think...
Yep, sorry, go ahead. Please.
Yeah, go ahead. No, I was just going to say, from my perspective, though, I really care a little bit less about whether it's 2 or 3. Maybe 1 wouldn't feel so good. But I think the important thing from an equity market perspective, kind of on a 6 to 12-month view, is really just to go ahead and get the cuts started. I think the actual number is probably less important.
Yeah, and then we can spend the next 6 months debating what scale of this cycle, whether it's the traditional 200 or not. Laurie, I love what you wrote this morning. There are signs of fatigue with the mega tech growth names. Now, this is almost heresy coming on this show saying this, but you make the point. It's about dynamic leadership. It's about the leadership in the U.S. equity market is itching to rotate. What's the risk with a deep rotation, or what is the benefit from rotating now?
So look, I think you really have to be specific when you talk about the potential for leadership to rotate. There are some folks out there who are, you say, something else is going to work. They automatically have in their head the picture of these Mag 7 stocks going down 10%, and that's going to tank the equity market. And that's not what rotation has to look like, right? It could be some of those big mega cap tech names that have done so well simply treading water, simply not leading, not going up as much of the rest of the market. So I think there are scenarios where a leadership shift could take the market down. I think there are scenarios in a leadership shift that simply could allow the market to go up with different things leading the way. And I'm probably more in the latter camp, notwithstanding my short-term pullback concerns, because if you look very simply at a PE chart,
on the top 10 names of the S&P 500, the weighted PE, or the equal weighted PE rather, is somewhere between 27 and 28 times. If you look at the rest of the S&P, and equal weighted PE there is about 16.5 times or so. And so I really do see, in terms of the seeds of that data, the case for a catch-up trade in the rest of the market. The rest of the market is sort of sitting at levels way below past peaks. The top 10 names are sitting up at peak valuations relative to the last 10 years or so. And then I've seen this time and time again in equity markets where you just simply have one piece that needs to catch up and it can extend the rally a bit.
And then if we flip it over to the bond side, I mean, if we do get any kind of a drawdown, George, it may well pay dividends to be long of duration now. But the market narrative over the past couple of days seems to be steepeners, steepeners, steepeners. Now, we lived through that in the back end of last year, and a lot of people got smacked, to say the least. You have a slightly different perspective. You talk about a reverse twist with the front end lower.
Yeah, no, we think right now, I think from a bond market's perspective, I mean, a couple of things to keep in mind. We emphasize very clearly, bonds are doing exactly what they're supposed to do: steady, stable cash flows. Bonds are not growth investments, they're cash flow investments. And so if you can maximize income right now and add a little bit of duration, you're doing okay. You're just compounding at a relatively high rate. And when we look at aggregate yields anywhere from, say, 4 up to 8% across the traditional publicly traded bond markets, when inflation's roughly around 3% or so, you still see very attractive positive real yields. When we sort of build portfolios that'll capture that income, carry it through time, we see very nice kind of compounding effects. Plus, when we add a little bit of duration to the portfolio, like we saw at the end of last year, kind of a brief pullback, if you will, or just a pause from a bullish perspective when folks think about the economy, if we were to see a little bit of softness on the labor front, or even just a little bit of a slowdown from a growth perspective, then that duration becomes very, very beneficial. So we like the income. We find very generous opportunities to use it to build good portfolios. And then we view the duration position as a little bit of a hedge against the potential for a harder landing.
Laurie, I can't let you go without just at least getting an opinion, not so much about the DJT stock in of itself. I'm not asking for a deep analytic on that, but it is quite a phenomena that we've had this reverse SPAC. The stock is up again another 16% this morning. Do you think that's a political narrative that's driving that stock, or is it something reflective of mania in markets?
So, I'll be honest with you, I've not looked at that at all. What we have been talking about in regards to the election is that if you look at the betting markets, you're actually starting to see Biden make a little bit of a move. Trump is still ahead, but we are starting to see a little bit of a shift there. And I know that Bloomberg had, an interesting sort of...
Yeah, we had the morning consult poll yesterday that showed Biden ahead. The economy is feeding through. And indeed, he is pushing through. The blue wall seems to be momentum. That's a shift, isn't it, Laurie?
It is. And, it's really interesting because if I think back to my conversations all the way back to last summer with non-U.S. investors, and I'll say this is mostly non-U.S. investors, not U.S. folks, but there has been a big view that there is going to be a Republican sweep in the U.S. and that the White House race was a done deal for Trump. And I would say that's not been quite the view among the U.S. investors I speak with. I think they're a little bit more confused about what the outcome is going to be. But for the non-U.S. investor, these moves that we're starting to see in some of this data, whether it's betting markets or your polling data, I think really flies in the face of some of the assumptions that non-U.S. investors have been making when they've been looking at U.S. equity markets. So it's a shift that we really do need to keep an eye on here.
Okay, team, thank you so much. Laurie Calvasina and George Bory on the markets this morning. One major market move has been in dollar-yen. The tolerance level at the Bank of Japan, the Ministry of Finance, along with the regulator, it became too much to bear. This is a currency which dropped by 4% over the past 2 weeks. Suzuki, the finance minister, says we're watching these moves with a high sense of urgency, and so down went the dollar. It was lower at one juncture this morning. I should say we traded up at almost 152, which is a big break point in the market. Kanda said we cannot tolerate speculative moves. What will they do? What will they do? This is the euro down, the yen rallying, and indeed you've got 10-year yields. Will they intervene as they did in 2022? They spent $60 billion. I put to you an outlier risk. You can always raise rates. There you go. Let's take a look at some of the stocks moving ahead of the opening bell. Abigail Doolittle is with me. Abby, good morning.
Good morning, Manus. Let's start out with yesterday's big winner, and that, of course, is Trump Media and Technology. The stock yesterday closing higher by 35% in its post-SPAC merger debut, its first day of trading. Today, in the pre-market, up another 19%. This is the most expensive stock to short for a number of reasons. And at the end of yesterday, this unprofitable company had a valuation of $7.9 billion. Robinhood up 8%. They've unveiled the Robinhood Gold Card, which will be offered exclusively to members of the firm's subscript. It does offer a 3% reward back, and they are planning, according to the CEO, to enter the market in a big way. Talking about big way to the downside, GameStop down about 15%. They put up a double-digit revenue and earnings misses. Baird is saying that the results are disappointing and that there are clear challenges to their retail model. Manus.
Okay, Abby, thank you so much. Coming up, the latest out of Baltimore following the collapse of the Francis Scott Key Bridge. You're looking at a live picture there now. The Maryland governor saying the top priority is recovery, bringing closure to families. We'll give you an update on the ground. 6 people are presumed dead. We will continue with that story in just a moment.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
We're going to send all the federal resources they need as we respond to this emergency. And I mean all the federal resources. And we're going to rebuild that port together. Everything so far indicates that this was a terrible accident. At this time, we have no other indication, no other reason to believe there's any intentional act here.
We're looking at a live shot of the collapsed Francis Scott Key Bridge in Baltimore. In the last hour, the Maryland governor, Wes Moore, said the top priority is recovery, bringing closure to those families. He reiterated that it's still too early for the investigation to speculate on criminal charges, as President Biden there pledges to cover the entire cost of rebuilding. Kaylee Lyons is with us now on the ground. Kaylee, I mean, still 24 hours on, we had quite a long, extensive news conference yesterday, 24 hours ago. How much progress has been made logistically? And this could have been a lot worse if there hadn't been that Mayday call.
Absolutely, Manus. Of course, it was 7:30 p.m. Eastern last night when the Coast Guard called off the rescue attempts. It is now a recovery operation that has been underway now for about 3 hours this morning. It began at 6 a.m. They are trying to recover these 6 individuals, construction workers who were on the bridge at the time that it collapsed, and try to bring some closure to their families. Maryland Governor Wes Moore said today that is his top priority. Of course, as you allude to, Manus, we also did hear from the governor repeatedly yesterday as well as today about the response of first responders upon receiving that Mayday call, stopping further traffic from coming onto the bridge before it collapsed. That likely saved many lives, but sadly, tragically, it does seem presumably now that 6 lives were lost. Of course, also today, in addition to the recovery effort, which is ongoing, we do expect that the NTSB, the National Transportation Safety Board, will board the vessel and conduct a thorough investigation into what exactly happened on board the Dolly before this collision and ultimately the collapse. That investigation will be underway with a 24-person team working on it. And of course, after recovery and investigation, then it is going to be a long effort to clean this up, to physically get this large ship out of the waterway, out of the harbor, and then get all of the debris out of the water as well. It is likely going to be a lengthy period of time before they can reopen the port of Baltimore, which of course is the crucial waterway for imports and exports. And then of course, reconstruction is a whole other animal, Manus.
Indeed, and that's the point to which Biden spoke about. The politicians are already arguing about the amount of money that was allocated under the Infrastructure Act. Look, this tragedy, and it is a tragedy, shines a light squarely on the delicate nature of the infrastructure, if one can say that, not just in Baltimore, but it's going to become a national issue, isn't it? This spotlight on infrastructure.
Absolutely, Manus. Now, we did hear from the Transportation Secretary, Pete Buttigieg, on this yesterday. He said there would be no reason for Americans to be concerned about the security of other bridges. Frankly, he said that no bridge is built to withstand a vessel of this size colliding directly into one of its support beams. And Governor Wes Moore also yesterday said that this bridge was up to code. This really ultimately was just a tragic accident, it seems. But yes, definitely puts a spotlight on the infrastructure. And also, when this bridge is reconstructed, how should bridges be different to now better coexist with vessels of the size that we are seeing now in the modern age, that in the way that trade flows are going to be questions we're dealing with in the months and years ahead.
Katie, thank you very much. Katie Lyons on the ground in Baltimore. Let's take a look at the economic impact of the bridge's collapse. Mike McKee is with me. Mike, this is from physical coal through to autos. What's the size and the scale of the Port of Baltimore, its impact if it's going to be out of commission, out of usage, let's say, full-scale usage?
Well, it isn't that big of a port, and that's why it won't be a major national impact. Obviously, for the people of Baltimore, it is a major tragedy and will cost a lot of money. But as you can see, there are 8 ports along the East Coast that are fairly large, and Baltimore is the 4th largest. And some of those others there in New York, in Norfolk, in Savannah are already taking some of the cargoes that had been destined for Baltimore. So there is relief on the shipping side. It may be important, the most important thing may be how quickly they get that harbor opened again. That's up to the Army Corps of Engineers. But the Port of Baltimore is only the 17th largest U.S. port, and it only handles about 1.6% of U.S. waterborne tonnage, that from the latest figures in 2021. It was the largest port, though, for automobile imports and exports. Savannah has good capability for that, so they may pick up a lot of that business. Maybe some of the real impact would be in rerouting truck traffic through Baltimore. It will slow deliveries in that area, but according to logisticians, is that the word I'm looking for? And the folks at places like FedEx and UPS, they can work around it fairly quickly. There is a question about inflation. This is automobile inflation, new cars and parts. Those prices have been going down. So it does appear that it isn't necessarily going to be a huge problem for inflation. May hold up the inflation numbers for a little bit, but it doesn't seem to be something that is going to be a major impact. So again, for Baltimore, a real tragedy and a real problem, but for the overall U.S. economy, not so much.
Yeah, indeed, and just confirming that, you got Michael Ferroli over at JP Morgan talking about a minimal, likely only a minimal implication in terms of vehicle inflation. That stuff coming in from Canada and Mexico being quickly diverted. Mike, thank you very much. The context on the economy coming up, your morning calls. And also we'll be joined by Jerry O'Keefe, co-head of global banking coverage at HSBC, to discuss his view on capital markets in 2024. That's at 9:30 a.m. Eastern.
you formed a partnership with Penny Pritzker at some point to do parking. Is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
The way I think about culture is they call organizations superorganisms. It's a collection of people, but the collection is greater than the individuals combined. So 1 + 1 is not 2, ideally it's 3 and greater. So if you were to look at a single person, a person has a set of core values, they may have dreams and aspirations. If you kind of map that to an organization, you can also think of the culture as your core values, personal core values turn into corporate core values, your organization's strengths and weaknesses. All those things collectively combined is something that we kind of put a label on it called the culture. A culture is like a muscle memory. It's very hard to change a habit. It's very hard to just say, hey, today we're going to define our culture as XYZ. We're just going to change this way. Like, it doesn't work like that. It's a collection of people's habits. That's like, again, like a superorganism. So you have to like really nudge and create an iterative feedback loop. It's a slowly evolving thing. So that's why it's so critical. Like your day-to-day decision-making, day-to-day operation, everyday execution is really dictated by the culture of your organization, not by a couple of like checklists. It's not what you write on the wall. It's what you do and live and breathe every day. And that is the culture.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal. That deal.
The deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Wow.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
DOJ or other authorities.
Connection lost.
Bigger challenge listens next.
Was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Your fixed income fix. Watch Bloomberg Real Yield at its new time, Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
The bid is back. We're counting down to the cash open, up 0.6% on the NASDAQ. Tesla managed to turn it around despite the sort of slight wobble in BYD this morning. The momentum in this market, we've just had a conversation with Laurie Calvacina. She still says that this momentum is there, 5,500 on the way up. We're bid up this morning. The rest of your market action looks a little bit like this. You've got your 10-year yield ticking down a couple of basis points. Asset managers, real money net longs are the lowest since July 2023. On top of that, you've got a whole other issue going on with dollar yen. You've got the Bank of Japan, the Ministry of Finance saying, drawing a line in the sand, enough is enough. They are ready, we understand, to verbally intervene. But to what extent are they prepared to actually put their money where their mouth is and actually intervene as they did in 2022? For now, Brent crude down 0.5%. You're just seeing various opinions out there about what OPEC Plus may do when they come to the June cuts. And good old JP Morgan, they're talking about $100 oil again. We're all safe. Brent crude trades at 85.72. Well, there's one stock to watch. It is Carnival at the open. The crews are reporting results, seeing $10 million impact from this bridge incident in Baltimore. Abigail Doolittle has the details. Abby.
Manus, that is the big deal coming out of this report, because initially the stock was up more than 3% because they basically beat and the outlook is pretty solid, but they also did say that they expect exactly what you just said, that the Baltimore bridge collapse could result in a $10 million hit to their 2024 income. They do, of course, have many cruises going out of the port of Baltimore, cruise lines unable to get in there because of the tragedy, that bridge collapse. So right now it seems as investors are going that way. The stock heading to its worst day since January. In terms of what was right, though, they did beat in terms of earnings. They put up a narrower loss than expected of 14 cents. EBITDA of $871 million was better by about 50 million. And they put up record revenue, $5.41 billion. All of this coming out of the pandemic. The revenge travel, adjusted earnings a little bit light, EBITDA better, but it really does seem as though investors are stuck on that headline that they are seeing a $10 million hit potentially in their 2024 income as a result of that tragic Baltimore bridge collapse.
Abby, thank you very much. Let's talk about some meme stocks. You've got GameStop seeing the biggest drop since June. That's after their revenue plummeted. Alex Semenova has the details. Alex, good morning.
Hey, Manus, good morning. GameStop's results were so disappointing to Wall Street this morning that Wedbush analysts said they expect the demise of the company as soon as later this decade. Net sales came in at $1.79 billion in the fourth quarter. That's a 19% drop from a year ago. Shares are down about 16% right now. That places the stock on track for its biggest decline since June. Now, this comes after GameStop enjoyed a bit of a meme stock party in recent trading sessions after the Federal Reserve signaled that it would cut interest rates this year. The stock had gained about 18% in the prior two trading sessions. That party's clearly over now, at least for GME. Baird Equity Research said it has limited confidence in the company's ability to restore growth and drive operating efficiency. Now, interestingly, Manus, you remember last quarter, the board had awarded CEO Ryan Cohen permission to invest in equity securities and manage the company's investment portfolios. They actually scaled that back under the new policy. The board has delegated that right to 2 board members in addition to Cohen. Manus.
Alex, thank you very much. Joining me now is Jerry Keefe, co-head of global banking coverage, head of global banking for the Americas region within HSBC. He oversees the bank's CIB, the capital markets activities, the corporate and financial institution clients. He is a busy man. We'll tag on private equity for good measure. Good morning. Good to see you.
Morning, man. It's good to see you.
You're the busiest man, one of the busiest men on Wall Street. So we appreciate you taking the time today. If I look at 2024, it started with such bullishness and euphoria. I come to the end of the first quarter, I've got job cuts, I've got people maybe just stepping back from that level of exuberance. Has it peaked?
Look, I think we're coming to the end of the first quarter, which will have been the biggest quarter in investment-grade debt issuance in history. It'll be the third biggest quarter in history for leveraged loan issuance. The markets are wide open. And so for us, it's been an extremely busy quarter. We're seeing healthy activity kind of across the piece. We're seeing it, as I mentioned, through investment grade, but also in the leveraged loan and broadly syndicated and private credit space. All of these engines are firing right now for the capital markets and for the banks and financial institutions more broadly.
Do you think they're still firing on full momentum, or is there any hesitation at all creeping in?
Well, look, right now, I think part of the reason the year's been so front-loaded is we have an election in the back half of the year. And I think everyone who's looking at the market from the issuer side and the investor side see a lot to like. From the issuer side, spreads are kind of in the bottom 10 percentile of history in the last 20 years. And from the investor side, all-in yields, based on where we are in rates, are in the top 90%, the 90th percentile of where we've been in the last 20 years. And so both are fully engaged, both are at the table, and we're just continuing to see activity come through the chute.
Okay, so if the activity comes through the chute, looking across, I mean, you have a broad church to look after. If I said to you across that suite within investment banking, DCM, ECM, where is the strongest momentum? And perhaps where's the strongest momentum going to continue? And let's just cast it forward.
Look, I think the financing markets on the debt side have really been the engine so far this year. Equity showing signs of life, as you've seen. We've had a couple of names come through in the IPO market, and hopefully that's a harbinger of positive things to come. M&A is spooling up, though. And if you think about the most important participants in the M&A market, it's our financial sponsor clients. They represent year in, year out about 40% of the volumes. In the last couple of years, things have been pretty quiet. You know, last year's activity was off 35% from 2021. We're now seeing real conviction around engaging in processes, people on the sponsor side really willing to dig in and do the work because the financing markets are there. The economy is in good shape. You know, people are no longer worried about things falling off the cliff that we were last year. We're seeing that kind of terms, structure, and pricing are all kind of coming the way of asset owners. And you know,
it sounds like a loaded gun. But what's the distance between powder in the gun and actually pulling that trigger?
Honestly, it's just time. I think it's time and kind of a continued positive tone in the markets. You know, for sponsors in particular, when you think about the opportunity set in front of them and the amount of pent-up demand there is, both on the corporate side for things like carve-outs and asset reconfigurations, and from the sponsor side on the interest in transacting on assets that are currently in portfolio, there's a lot of interest on both sides. And now that the financing markets are really there and at the table, we're expecting to see some activity.
What do you make of the argument that a number of deals, a number of protagonists, a number of equity market deals, debt capital market deals were being restrained because of the lack of impetus from the Fed to cut? Here we are, we can debate whether it's 3, 2, 1 or none.
Yeah.
But what do you make of that thesis?
Well, look, I think the most important thing for people who are trying to price assets and trying to transact is having an understanding of what the overall path is on rates. We don't necessarily have to know the exact landing point. Last year, there was a lot of uncertainty around the path of rates because inflation was bouncing around. People didn't know whether the next move from the Fed was going to be up or down. You had Richard Clarida on earlier, I saw, so we'll consider that topic well covered. But I will say that, you know, now that people feel comfortable with the general path of rates, that the economy is in relatively good shape, and that, you know, terms, pricing, structure, and kind of general access to markets is open, I think you're going to see things move.
So are you the right size at HSBC? I've got other institutions cutting, whether it's 20 jobs at one shop, whether it's a couple of hundred jobs at larger shops, are you fit for purpose in size? Have you got the right people in place to deal with this flow that you've just outlined?
Look, we've got an exceptional team here and globally, and I think we're right-sized for it. You know, we'll continue to see all the banks adjust. Banks rarely have it exactly right at any point in the cycle. You know, I've been in this business for 25 years now, and it seems like someone is always hiring up or cutting people.
Where are you in that cycle? Are you in the hiring up, or are you in the prepared to cut?
Well, you probably saw some comments from my global boss, Greg Guyette, last week about an interest in hiring up, both on the investment banking side and in project and infrastructure finance. We believe we're entering a golden age of project and infrastructure finance globally, particularly in markets that are really important to HSBC around Asia and the Middle East. The Inflation Reduction Act here in the U.S. has proved a huge catalyst for our global clients to be investing here, and so, you know, if anything, we probably have needs.
Okay, so golden age, get your CVs in there. Jerry's inbox will be full at the end of the conversation. Yeah. Let's deal with one of the big announcements, which took a lot of the heat, I think, out of the earnings day, which was commercial real estate. It's a very hot topic here. You've slashed your exposure by 27%. The question that goes through the market's mind is, have you got much more work to do? Are you happy? Are you right-sized at the right level?
Look, I think on CRE generally, this is kind of the most rate-sensitive and the most leverage-dependent asset class out there. And so when you see what's happening with rates and you see that kind of banks are slowly but surely and other providers of capital are slowly but surely coming back into the market, you have to conclude that the bottom is behind us. I usually think you find the bottom when you can't find anyone to say anything good about an asset class, and I think that was probably Q4 in CRE land. And it's important to disaggregate CRE. You know, there's multifamily, there's industrial, there's logistics, there's data centers around AI. All those are doing quite well. We're really talking about Class B and Class C office. We just moved into a new Class A office over in Hudson Yards. You know, the lease up it's apparently turned into a food fight in our building. And so I don't think anyone's particularly worried about new Class A. It's really B and C.
Do you think there'll be other shoes that drop in Class B and Class C that could be, I suppose, market disruptive? We're trying to look for those disruptors, aren't we?
Look, we are. I think it's a bit of a bank-by-bank analysis. I think you just have to understand for each bank what their exposure is to CRE and what part of CRE there is in there. I think when you try to make an assessment of a bank based on the total amount of CRE exposure, have you either risk overstating or understating the risk, depending on what sector they're invested in, right?
Then if I said to you, where are you most uncomfortable with your CRE exposure before we move on, where is that?
We're comfortable with our CRE exposure.
You're comfortable with that, and you don't agree with Carson Block. We're in the foothills of 2007. He's just selling something. He's selling another dream or a nightmare, is he?
Carson Block's in the business of saying things like that.
You talk about a golden age. I'm just wondering, when you look at the pools of capital, you've got China. We'll talk a little bit more about that in a moment, but where is the biggest depth of origination going to come from, let's say, for the back end of 2024 and into 2025, in your view?
Look, I think globally what we see, and we should talk a little bit about the Middle East and Asia and Europe. I think, you know, obviously the U.S. market, which is kind of my primary area of responsibility in global banking here, I think that's well covered and well understood, and that's, I think it's basically go time in the markets here. Now, in the rest of the world, the story is a little bit more complicated. In the Middle East, for example, I think the Middle East is probably the only place in the world right now where you're seeing announcements of $40 billion funds to invest in AI. That's probably the most important pool of capital between the Middle East sovereign wealth funds and the Asia sovereign wealth funds that are out there right now. And I think when you think about what the level of investing is going to be and deployment is going to be and the need for leverage to support that deployment of capital is going to be, I think you have to look to those parts of the world because they're very much open for business and continuing to be ambitious outbound. One of the most underreported stories that we've come across in talking to our clients is the China outbound story. So China is right now entering probably a second wave of outbound activity where their corporates are investing overseas. So the automakers are all investing in Thailand, they're investing in Mexico, the battery companies are all invested in Hungary and Romania. This type of activity often it creates, as we see what we call a re-globalization, creates a lot of opportunity for HSBC's global franchise to sort of step in and support these clients as they make moves outbound.
As you see that flow of money and that global investment coming out of China. Is that going to be your biggest growth initiative? Is that going to be one of the strongest flows for you from China, outward investment rather than domestic investment?
It's certainly an important one, just because we have an incredibly strong franchise there, right? We've been in China for almost 160 years. We built up a lot of quality relationships. So when they look to go outbound, we're the bank that they know and trust most.
Let's just revert back to the Middle East. I'm duty bound to ask: Are you on the Aramco, the additional IPO Aramco ticket? You signed up?
Look, we don't comment on specific client matters. As I understand, you have to ask, and I appreciate that. It would obviously, given the strength of our franchise there, would make sense, but that's not something we comment on. We're the only bank to have been on top of the league tables in each of the last 3 years in both DCM and ECM. So we've got an incredibly good franchise there, really high quality, and I think we'll continue to press that advantage.
What is their ability to raise $20 billion in this market say about war, geopolitical risk, and the Middle East?
Look, I think the geopolitical risk is kind of always there. And I think you have to think about from the perspective of what is actually happening with the funds that get raised from the Middle East. This is about diversifying their economies, right? This is about investments in tech, in healthcare, in life sciences, in infrastructure, in the energy transition. Those thematics, I think, will continue. Obviously, no one wants some of the negative situations that we have out there right now. But at the same time, I think we feel pretty good about the ability to deploy capital in those areas.
Jerry, stay with me. We've got more to discuss. That's Jerry Keefe sticking around for more on his perspective on the world and global banking. This is Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Our CEO, Noel Quinn, who I know you know well, is that I was given a very kind and welcoming reception. And I think that for people that are client-facing, that's how you want to make them feel. You want to make them feel good coming in the door, because our business, to me, it begins and ends with clients and how you make them feel, and are they kind of confident in your ability to transact and execute for them. And I think by making people feel, like they're being subjected to a smell test on the way in the door, that may not be the optimal path.
Jerry, thank you very much for giving us your time this morning.
Absolutely.
You're right. The smell test may not be the optimal path. Ill phrasing by me. Thank you for giving us your time this morning. Come back, tell us how those deals crank up. Jerry Keefe, Head of Global Banking Coverage over at HSBC. Let's get into some price action this morning. Back to Abigail Doolittle. Abby.
Well, Manus, right now we are looking at a gain for the S&P 500 of about 0.6%, the best day in a week. All 11 of the S&P 500 sectors are higher, led by utilities. That, of course, is a defensive sector, so there's not the most risk-on tone around that, but nonetheless, 3, 4 sectors up by about 1% or more. The worst sector, energy, up just 0.1%, in sympathy to some degree with oil down. Now, before we take a look at the cruise lines, or as we take a look at the cruise lines, we also have news on Reddit, one of its first down days in its 80% pop over the last week since IPOing. There is a firm adding it to its short list, that is Hedgeye. And then take a look at the S&P 500 hotels, up 0.3%, a little bit more. Carnival, of course, a drag, down 1.8%. This after a little bit of their guidance is somewhat disappointing. Adjusted earnings slightly light on the year. But again, there is that headline that they see the Baltimore Bridge collapse resulting in the potential of a 10 million hit to their income for 2024. So again, that stock down as investors try to parse through those details, Manus.
Abby, thank you very much. Coming up in the show, market moving events, setting your agenda on this shortened trading week. Your trading diary. It's a bleak, overcast New York.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words and then you put a few sentences together, and one day, you might be able to write poetry.
Trading diary, well, you need to be watching. We've got Fed Governor Chris Waller speaking at the Economic Club of New York. That's tonight. Thursday, Sam Bankman-Fried is scheduling for a sentencing in New York. Plus, we'll have another round of jobless claims Friday. Takes us to the close of the week. We have the US PCE data, and the Fed Chair Jay Powell speaks. Plus, US markets will be closed on Good Friday for holiday. The only thing you can probably trade is Bitcoin. That was Countdown to the Open on Bloomberg. Good morning from New York.
In tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale
and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. This is the Bloomberg Intelligence Program. We focus on the research department at Bloomberg, that is known as Bloomberg Intelligence, 400 analysts around the world covering 2,000 companies, 130 industries around the world. We lean heavily on them as we focus on companies, stocks, bonds over the next couple of hours. Alex Steele, we gave her a couple hours off, so Bailey Lipschultz is sitting in for Alex for the next couple hours. We're going to drive this conversation forward. We're going to get the latest reporting from Baltimore. Bloomberg Television's Kaylee Lyons is on the ground in Baltimore. We'll get the latest reporting there. Then we're going to take a look at this tragic incident from an insurance perspective. What companies, what entities are going to be on the hook? Matt Palazzola, he's a Bloomberg Intelligence senior analyst covering the insurance industry. He's going to join us in this hour. Plus, Allison Williams, Bloomberg Intelligence, she's a senior analyst covering all the global investment banks. Talk to us about what's happening in the global investment banking space right now. But first, let's kick things off with Lisa Mateo in a Bloomberg Business Flash.
You got it. And Market Drivers brought to you by Interactive Brokers. Interactive Brokers clients earn up to 4.83% on their uninvested, instantly available USD cash balances. Rates subject to change. Visit ibkr.com/interest rates to learn more. To the markets we go, where stocks are advancing, and this after ending lower in Tuesday trading. Right now, the NASDAQ just ticked down. Look at that. The Dow right now is up about 0.7%. The S&P 500 up about 0.3%. The S&P 500 actually having a good run. It's set for its 5th straight month of straight gains. Investors, though, still cautious ahead of Friday's release of the Federal Reserve's preferred inflation gauge. So we'll stay tuned for that. As far as yields, the 2-year yield at 4.58%. That's little change. The 10-year yield at 4.22%. and that is little changed as well. We had some housing news. The MBA's mortgage applications index, it fell about 0.7% last week, and that's after falling more than 1% the previous week. And since we're talking housing, I thought this was interesting. The latest rental report from Realtor.com, it says renting now less expensive than buying a starter home in all of the nation's major metros. That is your Bloomberg Business Flash. Paul and Bailey.
All right, Lisa Mateo, thank you so much. We appreciate that. Bailey Lipschultz sitting in for Alex Steeler here for the next couple of hours. This is the Bloomberg Intelligence program. We are broadcasting live from the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's check in with Nora Melinda. She covers all the markets for Bloomberg News. She joins us live here in our Bloomberg Interactive Broker Studio. Nora, what are you looking at?
Well, I wanted to take some time to look at some of the stocks that Bailey covers.
Nice.
Let's take a look at GameStop. Fourth quarter results were so disappointing that Wedbush expects that the company's demise at some point this year may happen. Shares are tumbling their most since June of last year, down as much as 17%. Now, their net sales missed expectations, and Bard said that results were a big letdown, pointing to challenges presented by its retail business model. Going back to Wedbush, they said that its current cash balance can endure about $100 million of annual losses for a decade or more, but it's highly likely revenues may drop by $150 million to $200 million per year. And this comes, of course, as we know, in recent days, traders have really been enjoying that meme stock rally, along with a few other stocks. GameStop shares were up about 18% through yesterday, if we look at the week.
Yeah, sad fallout for the meme stock that I covered for years, Nora, as you mentioned. Yeah, down 15%. The interesting thing also, they used to let Ryan Cohen, the CEO and chief memer, invest. But now the board gets a say in what they do with their money. Nora, what else is going on?
Looking at Trump Media.
Oh.
I know.
That's up
Staying
again,
in
right?
your alley. Yes,
Right
this is
in
on the
my
upside.
wheelhouse.
On the up and up. Those shares are pairing their gains, but up as much as 24% on track for their second day of gains, as after it IPO'd, shares closed just under $58 yesterday. As Bailey wrote, it added about $1.4 billion in value after its NASDAQ debut. And according to the SEC, Trump's roughly 60% stake in the unprofitable company behind Truth Social may ultimately be worth more than $6 billion in value.
All right, so this thing has like a market cap of about $8.7 billion right now. So it's, I mean, this is a significant equity play here, and stock's up 11% here today. So be interesting to see kind of how it plays out, because it's, you know, there's really not a valuation call here. This just seems like it's just one of those, almost a meme stock, if you will, people just buying it out there.
And it's really interesting, especially as we're in an election year.
Yeah.
I think that this can be really critical for Trump, or he may even use this as a way to kind of add in his own 2 cents as people are kind of looking toward his pathway toward re-election.
Yep, okay.
We saw the SPAC rally 88% when DeSantis pulled out, so it definitely is a barometer for Trump's political aspirations.
Absolutely good. Anything else?
Wanted to wrap up with Robinhood.
Okay.
So this is for the retail traders here. Those shares are rallying to their highest since 2021 after the company said that it's rolling out a credit card. It's looking to transition into a broader financial services company, and the CEO said that its goal is to enter this market in a big way. He said, "We don't want to just roll out a credit card that our customers will adopt. We want to roll out a product that can lead the industry and move it forward."
All right, very good. We're going to be speaking with the CEO of this company. Robinhood's market CEO and co-founder Vlad Tenev is going to join us in the 11 o'clock hour. So we'll have that, some latest. That'll be very cool there. Nora Melinda, thanks so much for joining us. Let's head back down to Baltimore, Maryland. Kaylee Lyons, Bloomberg Television. She is on site there at the site of the collapse yesterday of the bridge there. Kaylee, thanks so much for joining us again here. What's the latest? What's the focus of the efforts in Baltimore today?
It is still all about recovery at this point, Paul, and we heard as much from the Maryland Governor Wes Moore when speaking to reporters just in the last hour or so. He said that is his top priority. He wants to recover these 6 individuals, construction workers who were just on the bridge working on potholes, doing their jobs, and suddenly were plunged into the frigid water when the bridge collapsed. He wants to be able to provide closure to those families that he has met with. So recovery efforts certainly are underway. They have been for roughly 4 hours now, began around 6 a.m. Eastern time, and as well as the investigation into what exactly happened here on board the Dolly in the moments leading up to the power losses, the loss of propulsion, ultimately the collision with the bridge. The NTSB will be conducting that work today. They do plan to board the vessel, and the NTSB chair, Jennifer Hominy, has told another network they were able to secure the recorder that was on board, that could provide a lot of data, a lot potentially telling us about what exactly happened here. But really, a lot of this work has just begun. We're not even into the long haul efforts of clearing all the debris out of the channel here, and of course, ultimately reconstructing the key bridge.
Kaylee, is there any sense of timing in terms of the investigations and clearing out that debris?
Well, the investigation has started. The NTSB is on the scene. I spoke with an official from the NTSB earlier today. They actually did a preliminary visit on board the vessel late last night. So the investigative work is already underway. As for timing for everything else, officials have been very reluctant to put any real estimated timeline into place, not just in terms of the clearing of the debris and the reopening of the Port of Baltimore, but also ultimately the reconstruction of the bridge. We did hear from Transportation Secretary Pete Buttigieg, who was on the ground yesterday speaking with the press, who said that this is not going to be quick, it's not going to be easy. He also said it's not going to be inexpensive. This is likely to be a multi-billion-dollar effort, and we know that in real time, as the port currently remains closed, there are over 100,000 workers who could be affected by this. This is an economic engine, not just for the city of Baltimore, but the state of Maryland overall, and it's unclear when that engine might be revving again.
Have they said, or have they disclosed, I'm sure it's too early, but I mean, I'm just looking at the video footage that we've all seen of this, portions of this bridge literally sitting atop this vessel in the middle of the channel there. Have they suggested how they're going to get that bridge off the ship and begin the clearing process?
It's going to be a very difficult effort, and likely there will be a number of different groups and agencies involved at both the state level and the federal level. We know that Maryland State Police are really overseeing the recovery effort underway today, but they're working in conjunction with the Coast Guard. The Army Corps of Engineers also will be key to this effort in trying to get the debris out and ultimately the reconstruction as well. So it's a lot of different moving parts working in cooperation together, but we have heard from authorities, including Governor Moore, that so far those cooperative efforts have been very supportive of one another, and they will continue to cooperate moving forward. But this is going to be a big effort, and there's a lot that is still under the water, a lot of debris, heavy metal that needs to be cleared, and that divers currently are working around.
Kaylee Lines, thank you so much for your reporting. As always, Kaylee Lines, he's Bloomberg Balance of Power host, giving us the on-the-scene updates from Baltimore, Maryland. We appreciate that. One of the issues here as we think about the ripple effects of what happened in Baltimore yesterday is who's going to pay for this stuff? And that kind of goes to the insurance discussion. And so when we have this insurance discussion, we turn to our expert, Matthew Palazzola. He's the senior analyst, insurance analyst for Bloomberg Intelligence. He joins us live here in our Bloomberg Interactive Broker studio. So, Matthew, it's not every day that we have an event like we saw yesterday in Baltimore. From your perspective, from the insurance perspective, how do you think it's going to play out?
So we know a couple things. It's obviously still very early, but we've seen some stuff in the trade press, and there's a little more information than there actually normally is on some of these disasters. The bridge itself, I've seen reports that it's valued at about $1.2 billion. Okay. I have no idea how much it's going to actually cost to rebuild it. The ship, the Dolly that crashed, actually is carrying, in my view, an unusually large amount of insurance and reinsurance, which is a good thing in this case. There's about $3.1 billion worth of insurance and reinsurance tied to that vessel. Now, that's also separate from insurance that's on the bridge and kind of other things. The problem is it's going to take a long time to play out. So the reinsurance that's on there will probably end up paying the bulk of the claims.
And how does this compare to, say, a hurricane or another form of kind of natural disaster or thing that happens where you have insurance and reinsurers kind of all pointing fingers?
It's a more complex event, right? So on the back end, stuff we probably will never see, there'll probably be a lot more back and forth. In terms of the cost of the event, I'm assuming very early back of the envelope, it's probably a mid-single-digit billions, probably like a $4 billion, or probably even less, honestly, which is like a small hurricane. I mean, we have hurricanes that are 20, 30, $50 billion. So in terms of the impact to the entire industry, it's probably very manageable.
Who insures this stuff? I mean, these ships go all over the world. They're monster ships. I have no idea how they get in and out of ports. Now that you think about it, they're so huge these days, and I got to traverse, dangerous waters, congested waters. Who insures this stuff?
So it's pretty interesting. The way it works is it's kind of a mutual claims paying group that it's specifically this ship, right? So a bunch of, this is kind of the way insurance started, honestly, is a bunch of people running the ships get together and they pool their resources, and that's where they get the insurance from. That's really only the very low layer of the insurance. So that's 100 million of the 3.1 billion of insurance, right? So then the rest of it goes to this global reinsurance market. Above the 100, there's kind of another bit of ship reinsurance, and then above that, it's the global reinsurance market. So think companies like Swiss Re, Munich Re, some of the Bermuda reinsurance companies. I don't know if they have specific exposure.
So do we know who's the names backing this? Who's insurance?
We don't. We know that AXA XL was the lead on some of the reinsurance. We don't know by how much, and that was just reported by the group at the time when they renewed the policy.
If I'm a shipper and now my path is delayed and I have to rethink how I'm operating, is there anyone that I'm covered by insurance or reinsurance? Like, how does insurance play into some of the delays that are likely going to happen as they eventually clear the debris?
There'll certainly be some knock-on effects, right? So it would be a business interruption claim. So it's kind of, I think, pretty classic, meaning there's something in your way, you can't do your business, you'll have some sort of business interruption claim. It's probably on the primary insurance market. If you recall, in 2021, the Suez Canal got blocked by that ship. There was talk about like $10 billion worth of commerce a day going through there or something like that, and that was 6 days. Even when that happened, it wasn't a huge amount of business interruption claims for the industry, but that would be where it falls.
All right, so are rates going to go up here, or is this just a one-off black swan kind of event? It kind of seems like it.
So reinsurance prices have been going up anyway, right? So, and the reinsurance market doesn't exactly move in lockstep anymore. It's kind of individual markets. So I think you will certainly see maritime reinsurance rates going up. So in case you're shipping anything overseas, Paul, you might have to pay a little more. But I think that's almost a given after an event like this, that just specifically to maritime reinsurance.
And looking at reinsurers, we've been sitting on the equities desk. We're trying to game out which stocks are going to move in which direction and who benefits and who loses. How does that play out? Like, is this in real time? We find out that X firm has to disclose that they're the main reinsurer on this, or how do those kind of dynamics play?
It's usually the way it works. So what will happen is, and I don't expect we'll see much of this for the names I cover, but what will happen is, as we go into earnings, if you are one of the companies with a big exposure to this and it's going to be material on your results, they will usually pre-announce that ahead of earnings, just so that they don't, dramatically miss the number on that day. So that will be the way it would play out in the market. But I don't think you're going to hear a ton from at least the Bermuda companies that I cover.
Gotcha. Where are we? I don't know, trailing 12 months on you're the disaster guy. So when there's a hurricane or some terrible fire with our friends in California or something like that, we turn to you. We haven't talked to you a lot recently.
Yeah, we've been all right. So even last year, what happened was Swiss Re just put out their annual catastrophe loss for the industry, right? And it was $100 billion for the third year in a row. And when I started in this industry many years ago, if you told me it would be a $100 billion loss year, we'd be shocked, right? It would have blown off the chair. Now it's been 3 years in a row that's happened. The interesting thing about last year was a lot of it was caused by severe convective storms. So not huge catastrophes, not huge hurricanes. So it was kind of these smaller events that built up. So that's probably why you're not hearing these kind of headline things. But the losses, are still there. That said, the market's still very well capitalized, and it really wasn't. It was still a pretty good year for the insurers. But that's kind of what's happening. And now, if you get a big event on top of those accumulation of smaller events, then it could be pretty bad.
All right, Bailey's in the market for a beachfront mansion down in the Palm Beach area. Can you get insurance on that stuff sitting on the water?
It depends on the state, but probably not. He might have to move into yours. But yeah, no, I mean, it's all the insurers are pulling back from all of the coastal states. It's partly climate change. I know we don't kind of like to point to that immediately, but it's not the biggest thing. The other thing is that property values have gone up. Inflation has pushed the repair costs up. And yes, the frequency and severity of storms is worse. So it's kind of all those things mixed together. I was just at a conference where someone said, a home insurance CEO, who I won't name, said they just wouldn't even touch New Jersey specifically.
Right. Right. Well, I'm
Tough look for us.
I'm 5 blocks in from the ocean, so I feel, and they're long blocks, they're big blocks, so I feel very safe there. But again, Superstorm Sandy came through, and still to this day, you get down to Manaloking in New Jersey, there are still lots, like a $10 million home got washed away. They haven't rebuilt. It's still sitting there empty. So those folks got crushed. So it's a thing. Matthew Palazzola, thanks so much for joining us. Senior analyst covering the insurance business for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio, trying to game out kind of what some of the insurance implications will be from this bridge collapse in Baltimore. Looking at the markets here, mixed. S&P up about 0.3%. The NASDAQ pretty much unchanged on the day. The Dow's up about 0.6%, 265 points on your Dow. This is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production,
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Any activity there that's unusual?
Not really unusual. European market has been solid. So Galderma was the company that went public. They're a skincare company, private equity backed. So kind of a different breed going public in Europe. The big area that's been booming, though, has been the Middle East. There's so much money, there's so much interest and activity in the Middle East. So that's one of the areas that has been very active. On the flip side, Asia's been quite quiet just because of the uncertainty around exposure to China, Chinese companies. That's one area that people are very, very much pessimistic about in the near term.
Well, how about the SPAC business? I got Trump Media and Technology Group, DJT is the ticker, up another 15% today, just under $67 a share. It's up 280% year to date, up almost 400% over the last 12 months. Does that revitalize the SPAC market at all?
It seems like a one-off. This deal was announced back in 2021, but whether or not this is the last great SPAC, we have seen some serial issuers coming back. So Michael Klein filed to raise $250 million. So
I'd put my money
don't
on
call
Michael
it dead.
Klein.
Exactly. Yeah, they were
Michael
successful.
Klein's a player. Okay. Speaking of a global investment bank, let's get to Allison Williams. She covers the global investment banks for Bloomberg Intelligence. She joins us from Princeton, New Jersey via Zoom. Allison, I guess the most recent story out is UBS. They're selling an $8 billion in loans to Apollo. I guess these are some loans they picked up when they acquired Credit Suisse. What's going on with our friends in Switzerland?
Yeah, so this is really just wrapping up a deal that Credit Suisse had put in place some time ago. So even before UBS had purchased Credit Suisse, they were winding down the investment banks. They had this business, the securitized products group, that they were getting rid of. And so they, upon consummation of the deal, some of those assets had been sold off, but the rest had been put in sort of a non-core unit. So I think this is really just kind of closing the loop on that. And it just shows progress that they're continuing to wind down the business. Some of the more, I don't want to say unprofitable, but sort of some of the more volatile assets, balance sheet intensive, the types of things that UBS really does not want to be involved with.
And Allison, UBS booking a net gain of $300 million in the first quarter related to the deal or the matter. Is this just a big win for them, given kind of how they're shedding the assets?
Yeah, I mean, I think if you look at some of the numbers that they gave, I mean, and there's obviously sort of the ways that they accounted for the transactions when they did the deal. I think, the important thing is probably not the direct impact, but just shedding those assets so that they can, kind of return to the core business. They have a huge road ahead. I mean, this is, $8 billion in assets. It's about 10% of the non-core book that they want to get rid of. And they're sort of on a long path of integrating the two banks. They've got big restructuring charges ahead. I think what we're focusing on really in the first quarter is, can we start to see some results from this investment bank? The part of what they wanted, obviously the wealth assets are huge for them. The Swiss assets are huge for them. But another thing they wanted was the investment bankers. And Credit Suisse really did have expertise in the tech area. As you know, Paul, they have a great reputation and done really well on tech IPOs. And what we've seen in the first couple of months of the quarter is UBS really moving up the league tables for tech IPOs, showing that they might be getting some of that benefit.
Looking at the stock here of thank you. I'm looking at the stock here, Allison, of UBS. The stock's kind of flat year to date, but it's up 65% on a trailing 12-month basis. So when you talk to institutional investors out there, what's the call here on UBS?
I think, it depends probably a little bit on your time frame. It's going to be a long slog. And so I think, the broader look at the company, and as you know, we don't make recommendations on stocks, but I think, when I talk about this company from a fundamental standpoint and how investors might be looking at it, it's going to be a very long time for them to, sort of get this deal done, the execution. As I said, we're looking at mid-single-digit returns in the year ahead. So there's sort of a long path to go to the 15% return on common equity that that they're kind of targeting in the long run, and a lot of work to do. So it depends on sort of the investors' patience. Also, somewhat of a show-me story. I think that the big gains last year really reflect that they did this deal. It was a very financially attractive, just given the structure of the deal, and especially what happened with the AT1s, and the fact that they were able to stabilize the wealth flows and stabilize that franchise. So I think a lot of the initial concerns were, will they be able to preserve some of that value, or will their competitors pick it off? And I think they did show that they've stabilized it. So we have the foundation, and now just need to start doing some of the heavy lifting.
And Allison, Paul's looking to put some money to work. He's got his eye on global banks and asset managers, which is exactly what you cover. What stocks do you like right now, and where does UBS fit into it?
Okay, well, as I said, we don't recommend stocks, but I will talk about, the fundamentals. And I would say that, one of the big things that investors are looking for this year is a pickup in fees. We think that we will get good growth in fees, but, we're nowhere near the 2020 levels. So that story could end up being a little bit disappointing. But trading, on the other hand, holding up really well. The asset values are great for asset managers, right? Especially from a mix perspective. We have equities at record highs. That definitely helps the fee prospects, because more assets just mathematically turn into more fees, and the potential for more flows. The flows are always tricky. They've also been good for the hedge funds and asset managers doing well. That means Goldman's doing well in their prime brokerage business. They do have more of a bent to those types of customers, but we think trading looks good across the banks. Bank of America is also someone that we're watching gaining share. Bank of America and Wells Fargo, who's a smaller one, but the share gains are really more meaningful for them because they're smaller. So from a fundamental standpoint, those skewed to trading, like Goldman Sachs, looking like a strong quarter.
All right, Allison, thank you so much for joining us. Allison Williams, senior analyst. She covers all the big banks, investment banks globally for Bloomberg Intelligence. She's based down in Princeton, joining us via Zoom. I guess one of my questions is, again, having worked for one of the firms that now makes up UBS, that being Payne Weber, I still don't know what UBS's kind of global ambitions are. Do they intend to compete against the JP Morgans, the Morgan Stanleys of the world, or are they, they're a little bit more focused maybe on just a handful of markets, a handful of business lines, and not going to kind of compete across the board? I'm not really sure. Now that they've acquired Credit Suisse, kind of what's happening there. But I think typically the street rewards, at least for those investment banks, kind of just focus.
Yeah.
You know, like Morgan Stanley focusing on the wealth management business, which has been so good for them.
Yeah, and Allison calling out their kind of jump up in terms of global equity IPOs, looking at the league tables on the terminal. UBS right now 7th, so right behind JP Morgan, ahead of Jefferies, Deutsche Bank, and BNP. So decent spot. I mean, the question to your point is, where are you going to focus? Where do you see your ability to drive market share and actually deliver?
Yeah, and they picked up, and Credit Suisse had a lot of good businesses. Leverage finance was one of them. The equities business was one of them. So we'll see it to the extent they want to grow that business. And of course, UBS houses the resources of one Paul Sweeney. So that's got to make that full disclosure there. S&P 500 up about 0.3%. With our news in New York, here's Michael Barr.
Thank you very much, Paul and Bailey. Recovery efforts resumed today for the 6 construction workers who are presumed dead after a cargo ship hit a pillar of the Francis Scott Key Bridge in Baltimore, causing the structure to collapse. Maryland Governor Wes Moore, at the wreckage of the bridge, says even though they are starting an investigation, recovery efforts are still the most important.
Yeah, well, the top priority for me right now is still the recovery. We've got to bring these families closure. I promised these families that I would instruct every single asset that we have to focus on that search and rescue, air, land, and sea assets to focus on search and rescue. Now that we've transitioned to the recovery phase, my promise to them is this: I will devote every single resource to making sure that you receive closure.
The ship apparently lost its steering capability before it hit the pillar around 1:30 a.m. Tuesday. Today, New York's MTA holds its final vote on enacting what would be the United States' first large-scale congestion pricing system. The plan would charge most drivers at least $15 to drive south of 60th Street in Manhattan. Danny Pearlstein is Policy and Communications Director of Riders Alliance, which is in favor of the plan.
Congestion pricing has been law in the United States for decades, but it hasn't been implemented. New York will be the first place to do it in North America. But around the world, all of the cities that have done it kept it, they were happy with it, and they built upon it.
Danny Pearlstein with Riders Alliance. Critics say it should coincide with a bigger commitment to improved mass transit service and should have included more exemptions. A law calling for Texas to arrest and deport migrants who enter the country illegally will stay blocked for now. An appeals court extended the block. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are higher right now. We have the NASDAQ. Well, it's little change. The Dow is up about 0.6%. The S&P 500 up about 0.3%. This is all after closing lower yesterday, but it was really quite a ride in the green for most of the day before that downfall, before the close. As far as yields right now, the 2-year yield at 4.57%. That's down about 2 basis points. The 10-year yield at 4.20%, and that's down about 2 basis points. Since we were talking about the stocks, I want to dig a little bit deeper. Of the 11 major industry groups, the biggest rise coming from real estate. Then you go a little bit deeper, we head into the equity real estate investment and then on to industrial REITs, which show us that real estate investment trust, Prologis, that's at the top. It's up about 2% right now. And since we're talking real estate, we have some housing data that came in. The MBA's mortgage applications index, it fell about 0.7% last week. That's after falling more than 1% the previous week. I have to point out spot gold, it's higher at $2,192 an ounce, and over to oil, NYMEX crude $81 a barrel, Brent crude at $86 a barrel. That is your Bloomberg Business Flash. Paul and Bailey.
Lisa Mateo, thank you so much. We appreciate that. We've got Bailey Lipschultz sitting in for Alex Steele here for the next time being. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on the internet, I think it is, Bloomberg.com. Search Bloomberg Podcast over there at what is it, YouTube?
YouTube? Yeah, YouTube. You can stream us. We're on,
you can stream
on
us.
the camera, yeah.
Very good. We're all there. And we're in your dashboard, too, Apple CarPlay. So we are everywhere. Technology is no boundary for us. One of the most read stories on the Bloomberg terminal is regarding former President Donald Trump. He is richer than ever, yet still strapped for cash. The former president's fortune on paper has vaulted to $7.2 billion thanks to his newly public media company. And the ticker there's DJT for his initials. But legal strains threaten his finances. To get more on that, we welcome Eric Larson. He covers all of this stuff for Bloomberg News. He joins us here in our Bloomberg Interactive Broker Studio. So, Eric, I'm looking at DJT. Stock's up another 11%. It's had a heck of a run here. Up 270% year to date, 370% over the past year. A heck of a good run for the former president. So there's net worth. How about cash? Talk to us about those two dynamics.
Right. So it was actually Bailey's story I was reading earlier about DJT. Is very fascinating. He's obviously more than doubled his wealth. But Trump testified in a deposition last year in one of his civil lawsuits that he had more than $400 million in cash. Just last week, he said on Truth Social that he had almost $500 million in cash. We're not exactly sure. We can't really exactly verify that. But he had been saying in that court case that he was low on cash. He didn't have enough to post this big bond. So that's kind of our relationship with Trump's cash right now, is his comments in regards to that huge bond that he has to pay for his appeal in that case.
And so your story calls out $7.2 billion in wealth on paper. How much of that is in Trump media? How much of that is real estate and other ventures?
Right. So it seems like the bulk of it is actually on paper, as you mentioned, from the Trump media. His real estate has always usually been the bulk of his wealth, about like 2.7 billion or so. I don't have the story right in front of me, but clearly that's Bloomberg Billionaires Index put his wealth at 3.1 billion before these verdicts. So the vast majority of that was real estate. And of course, there's licensing deals around the world and things like that. So now that with Trump media, his wealth is largely from the shares, which is fascinating to me. But of course, his real estate continues to be, his crown jewels of his portfolio.
Yeah, so I'm looking at DJT, Trump Media. It's got a $8.7 billion market cap. And I pull up FA, the financial analysis section, to see the financials for this company, and I don't really have any. What's going on?
Well, part of that is because it's a SPAC deal. Our filings kind of are backloaded. That's why I will caution with SPACs.
So what do we know about the financials of this company?
They revenue $3.4 million in the first 9 months of last year, and they lost, I think, Eric, correct me if I'm wrong, about $30 million.
Right.
So we're valuing that company at $8.8 billion.
Correct.
Just so I can get I'm an equity analyst. I'm trying to do my valuation here.
Paul, it's a last night it was a 2,200 price to sales multiple.
Price to sales.
Reference NVIDIA is about 38.
Okay. Understood.
And what was Facebook, I believe I saw when it went public, was something maybe like 12 times its revenue.
So this is are we characterizing this company at this stage as a kind of a meme stock?
I mean, we could call it a startup. Okay. But it certainly has been put in that category. I think when one meme stock moves one way, a lot of them tend to. I think that's sort of been true with this.
Okay, so what do we know about the liquidity of the former President Trump? Again, he's been given a little bit of a reprieve here to come up with this $175 million bond, but again, there still is that judgment out there for the larger amount.
Right.
But I guess the expectation is he'll satisfy that bond either with cash or...
He has said that he will satisfy that with cash. Now, keep in mind that earlier, or just in January, he lost a big defamation trial with the writer E. Jean Carroll, who had accused him of sexually assaulting her in the 90s and then defaming her by denying it. And that was an $83.3 million verdict. He did post a bond in that case of over $91 million in order to put it on hold while he appeals. So that took up almost $100 million right there. Then we're getting 175 from this next upcoming bond. Okay. And he has said he still also wants to be able to spend some of his money on his campaign. So that, I mean, even based on what he's saying he has, that's using up a lot of it.
And Eric, when we look at the inability, from my understanding, to borrow against his Trump media stake, can he take out loans against some of his other real estate? Like how, if he doesn't want to use the cash on hand, how can he kind of churn up some money?
I mean, that certainly is an option. I think some wonder if he hasn't already done that, though, with some of his properties. We know that he's refinanced some of them, but he has claimed that he has very low debt on his properties, so certainly one of them he should be able to borrow against if he really had to. But it's also possible that he could get the board of TMGT to change the rules on that lockup period, potentially, and which would allow him to sell some shares theoretically before that 6-month period, although that might be a bad look with some of the other buyers.
Interesting. I mean, looking at the MGMT function, the management function for the Trump Media and Technology Group, again, the ticker's DJT. I don't see former President Trump on the board or listed as an executive, but I do see his son is on the board, Donald Trump Jr. But do we know of anything of his interaction with this company, or is he simply the shareholder?
Well, he's certainly the face of it. Yep. I don't know exactly how much in the day-to-day he's involved in it, other than, of course, being the star user of its main or only product, Truth Social. So, you know, as you pointed out in your story, Bailey, a lot of these purchases, you know, this stock is largely seen as a bet on his political futures as well. So, in a way, these meme stocks are betting against, you know, they're betting against Wall Street, or in this case, betting against people who are Trump detractors who don't think he can win. Okay, well, certainly having a good run here. That's for sure. There's certainly some buyers out there. We're seeing good volume again. The stock up over double digits here, about 12% on some pretty decent volume. Eric Larson, thanks so much for joining us. Eric is a Bloomberg legal reporter on this story. That it's a great headline. Trump is richer than ever, yet still strapped for cash. So we'll see how that plays out going forward. And the question I have, Bailey, is just as a someone who used to follow the social media companies like Facebook, like Snapchat, wonder have to take a look and see kind of where the users are, where the revenue is, and see kind of what the opportunities are for this company.
And that's been the big thing when I talk to investors who are not in the stock but are on the street, and their big question is, how can you actually monetize a business? If he wins the presidency, does that then draw people to Truth Social and advertisers in turn, or do they go out and acquire companies? That's the big kind of question, is how do you fundamentally value what really is a app that has been around for a little over a year at this point?
Right. And, just seeing the business model for these social media companies, it's very simple. It's no different than the magazine business back in the day, the newspaper business back in the day, is you amass an audience. The bigger the audience and the more engaged the audience, the more valuable that is to advertisers. You amass an audience and you sell advertising against that audience. As simple as that. Maybe a little bit of e-commerce in there if you're fortunate, but really it's an advertising game. So the question for the folks at Trump Media and Technology Group will be what kind of audience they can amass over time. S&P 500 up 0.25%. The Dow's up 0.6%, 228 points. The NASDAQ pretty much unchanged. We'll have more coming up. This is Bloomberg. Good morning.
company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Shares of Carnival, they are lower after opening its books. Now, it also said it's seeing a $10 million impact from the Baltimore bridge collapse, as many of its cruise ships use the port there. Bloomberg's Abigail Doolittle explains.
Cruise lines unable to get in there because of the tragedy, that bridge collapse. So right now it seems as investors are going that way. The stock heading to its worst day since January. In terms of what was right, though, they did beat in terms of earnings. They put up a narrower loss than expected of 14 cents. EBITDA of $871 million was better by about $50 million. And they put up record revenue, $5.41 billion. All of this coming out of the pandemic.
Shares are down about 2%. Sticking with earnings, retailer H&M posted better than expected operating profit. Its spring collections pushed sales higher in February. Their ADRs are up about 16%. And GameStop reported adjusted earnings per share and net sales for the fourth quarter that missed estimates. Bloomberg's Alex Semenova has reaction.
GameStop's results were so disappointing to Wall Street this morning that Wedbush analysts said they expect the demise of the company as soon as later this decade. Net sales came in at $1.79 billion in the fourth quarter. That's a 19% drop from a year ago.
Now those shares are down about 16%. And Robinhood said it's rolling out a credit card to U.S. consumers as it pushes beyond trading. The Robinhood Gold Card will have no annual cost or foreign transaction fees. Stay tuned because we'll ask the CEO all about it here on Bloomberg Intelligence in about 5 minutes. Robinhood right now, it's up about 3%. And since we're talking credit cards, Visa, they say it's adding 3 new AI-powered fraud prevention tools to its lineup of products for business clients. That's to improve security. Visa right now is down about 0.8%. And some news from EV maker Fisker slashing the prices of its Ocean SUV. That is your company news at this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Just looking at these markets here, the S&P 500 is up about 0.3%. The Dow up about 230.6%. The NASDAQ, I'm going to call it, for Lisa Bromwich, unched on the day. Nothing happening on the NASDAQ here. Bitcoin also unched on the day, 69,800, but it's been all over the place. Typical volatility there for Bitcoin. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Bailey, and Lisa. It is no longer a search and rescue operation, but search and recover after yesterday's collapse of the Francis Scott Key Bridge near Baltimore, Maryland. A road crew was working on the bridge at the time of the collapse. 2 were rescued, but 6 remain unaccounted for. Maryland Governor Wes Moore, at the scene of the collapsed bridge, says he cannot speak to any criminal charges because it's just too soon.
It's still too early in the investigation to rule anything in or out, but we know the investigation, wherever it leads, that we will follow wherever the investigation leads.
Maryland Governor Wes Moore. In Alabama, Republicans control the governor's mansion and both houses of the state legislature, but a Democrat has pulled off a win in Tuesday's special election. Marilyn Lands made abortion and IVF access a central part of her campaign for a seat in the Alabama State House. Her campaign ads took a jab at supporters of former President Trump.
MAGA extremists are devising new and cruel ways to further erode our most basic freedoms.
Democrats at the national level see Land's victory as a backlash against strict abortion statutes in GOP-dominated states like Alabama. The New York City MTA is holding its final vote on congestion pricing today. Drivers would pay anywhere from $15 to $36 just to drive on some midtown Manhattan streets, on top of the tolls to come through via a bridge or a tunnel. Supporters say it will lead to fewer traffic jams, reduce air pollution, and provide annual cash of about $1 billion for the city's subway and bus systems. Eric Goldstein is with the Natural Resources Defense Council.
It's happening here in New York because we have some of the slowest city speeds in the nation, 7 miles per hour in Midtown, and speeds have actually decreased since 2010.
Critics say it should coincide with a bigger commitment to improved mass transit service and should have included more exemptions. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Bailey, Lisa.
All right, very good. Michael Barr, thank you so much. We appreciate it. I'm all over this cruise business. I've never been on a cruise, but I think the business is fascinating. Carnival Cruise Line's down 2% today. Carnival slightly raised its outlook for 2024 amid record-setting demand for cruises. However, the company also cited a negative impact related to the collapse of the Francis Scott Key Bridge in Baltimore and is continuing to feel the effects in the conflict in the Red Sea. Even with less inventory available for the remainder of the year, booking volumes hit an all-time high, driven by demand for 2025 sailings and beyond. Josh Weinstein, Carnival Chief Executive Officer, said in a statement. They're saying this bridge in Baltimore might cost them about $10 million in cash flow and earnings this year. In a separate statement, the cruise operator said it will temporarily move its Baltimore operations to Norfolk, Virginia, including a 7-day trip scheduled later this month. So there's just an example, Bailey, of a company kind of altering its business plans a little bit to take into account what happened yesterday in Baltimore.
And I know we were talking to Anthony earlier about the reinsurer business off of this. I'm very interested, and maybe you did this when you were working on the street, how you come up with the $10 million number in a day and a half, because this happened yesterday morning, and now you're just kind of...
Well, the company's estimated. This is a company estimated number. I guess they kind of know their business. But again, Baltimore, for most cruise lines, as I understand, is not a main port. I mean, it is a port. But it is not like a Miami port.
Yeah, I remember covering one of the hurricanes down there in Florida, and it was like
those Caribbean things. But
away.
you know, again, fortunately, there's other options. Again, in this case, Norfolk, Virginia, which is not far from Baltimore, so maybe the good folks in that region of the country can get to Norfolk relatively easy with not too much inconvenience. But again, just an example there of a company having to make some changes to their business plans based upon the bridge collapsing in Baltimore. The cruise business remains very, very strong. People are spending money on those cruises. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We've got Bailey Lipschultz sitting in for Alex Steele. We're broadcasting live from the Bloomberg Interactive Broker Studio. We're doing the streaming thing on the intraweb, so I think it's youtube.com. You go over there and you search Bloomberg Podcast, and that's where you find us. Big news today for our good friends at Robinhood Markets. Stock's up 3.6% today. The company unveiling a credit card. I need more credit cards. Look at the stock here. See, I'm a Wall Street guy. All I care about is the stock. Stock's up 56% year to date. Wow. Trailing 12 months up 132%. It's got a $17.5 billion market cap. So big news coming out of our friends at Robinhood. Vlad Tenev joins us. He's the Chief Executive Officer. He's a co-founder of Robinhood. He joins us here in our Bloomberg Interactive Broker Studio. I'm not on the Robinhood platform because I'm a gentleman. I need the Swiss bank secrecy laws protecting me. But my 28-year-old twins, who are the future of this thing, they are on Robinhood. They're very happy. They were psyched that I was talking to Vlad. Vlad, talk to us about your news today. You're not just a commission-free platform, which is in and of itself amazing, but you're now getting into the credit card business?
Yeah, we were really excited to announce this. We've been working on it for quite a while, and we didn't just want to launch another Me Too credit card. We really wanted to come in and do something special and really lead the industry. So it's really the best cashback rewards that we found in any credit card on the market, the best digital experience, and really the best design. We have a solid gold card that's basically a hunk of metal. It's extremely iconic, very simple, like very well designed. We're really proud of the product. Now, the hard work comes of rolling it out, but even since the announcement, in the first few hours after the announcement, which was last night, we had hundreds of thousands of people signing up for the credit card. So it's looking very good so far.
How does the credit card fit into the business? Because I know early last year you guys announced a retirement product, so it feels like you're trying to expand away from the core trading platform?
Yeah, so as a business, holistically, we're focused on three things. The first is being the #1 platform for active traders. Right now, we're #2, but we have a path to being number one in some number of years. And that's really through user experience improvements, product innovations like 24-hour market, adding new asset classes like futures, new platform launches like our Web Pro platform, which we've announced. But we don't want to just be an active trader platform. We also want to grow wallet share with our customers and help them build wealth. That's where Robinhood Gold comes in. That's where our innovations in the retirement program with the 3% match come in. And of course, now the credit card is sort of another pillar of us growing wallet share with customers and helping them do all of their financial activities in one place via Robinhood.
So are you competing with this card with the bank-issued Visa and MasterCards? Is that the market you're now going into?
I think that we're trying to do something really interesting with this card. So if you think about premium credit cards, the best ones out there accept less than half of the people that apply.
Is that right? So
Yeah,
it's like,
less
is that
than
like
half
the,
of
is that a
applicants.
Chase Sapphire or is that an Amex Platinum or whatever?
Those classes of credit cards,
okay.
really like the typical sort of like super prime premium rewards cards, and they have high annual fees.
Right.
So what we wanted to do is, in the same way that Robinhood democratized stock trading and made it accessible to a wider group of people, we want to open up the private client experience. I don't know if you've been to a Chase branch, but you can see there's two doors, one for the private clients and one for everyone else. And the whole idea behind Robinhood Gold is giving that private client experience for as little as $5 a month, opening it to everyone. And it starts with the premium credit card. Of course, the retirement benefits where you get a 3% match, the first and biggest in the industry, the 5% APY on our cash, which is just a institutional grade high yield offering that you have to have, you know, millions of dollars to match at other brokers. So yeah, we're putting all this together and we're seeing Robinhood Gold customers actually depositing the lion's share of their money into Robinhood and really growing with us. And I think we have an opportunity to offer them services for all of their financial needs.
And Vlad, the perks are pretty sweet. As you mentioned, 3% cash back on all purchases. Do you make money off of this? How is this going to be kind of another peg for the profitability and the growth of the company?
Yeah, two things there. One is we do, obviously, any business line we enter, we intend to be profitable over the long run on a standalone basis. So not just accretive, but we anticipate this being a profitable business line just within the card portfolio. And that's through not just the interchange transaction revenue, but also the lending business through the card. We anticipate this would actually be a very attractive card for people building credit over time and not just folks that pay off their balance in full. And then the other side of it is we see that when customers adopt Robinhood Gold, their rate of deposit growth and account balance growth is much higher than non-Gold customers. They also adopt our products at a much higher rate. And so even though they're getting so much more value with all of these industry-leading rates and value props, the revenue that accrues to the business from the Gold relationship is also multiples higher than non-Gold customers. And we think the credit card, since it's so core to people's financial needs, typically all of the lion's share of their spending goes through credit. And if you're using a credit card, much easier to grab the paycheck deposit.
Sweeney carries cash around, though. This is a guy who walks around with hundreds of dollars in his pocket. I don't know why.
I asked myself the same. When you walk into a bar at the Jersey Shore, you put good cash on the bar there. Vlad,
I'll show you what I've got in my pockets.
Oh, he brought the card.
That's very cool.
14
carats.
carats.
Let's show this. All right, folks, we're showing you this card. It weighs something. You got some heft.
Well,
there.
it is.
This is the card here, folks. It's
awesome.
basically
gold bullion. It's like it's not gold plated. It's a.
This is legit.
Solid
I don't see
chunk.
your numbers though. I can't make some purchases right now.
That's the great thing about it, because this is a digital first card, and we outlined all of the awesome digital features like virtual cards, like family focused suite of features. Yeah, you don't actually need the number on it. You can open up the app, look at the number, the expiration date's on there. The design of the card is minimal, only the Robinhood brand, the chip, and on the back you have your name, and that's pretty much it. So if it gets stolen or lost, you don't really have to worry about your actual number being used.
Yeah, but then you lost a cool card.
Replace it.
All right, so who is the typical Robinhood customer these days, client these days?
A typical Robinhood customer, I would say, is someone in their 30s.
Okay.
They tend to be an early adopter of technology. They have, half of our customers make over $100,000 in annual income. So it's not sort of like the paycheck to paycheck customer as maybe some people think.
Yep.
And we also have much larger customers with big accounts. We recently have been introducing matches. In fact, last night we rolled out another initiative, 1% unlimited deposit match into Robinhood for all dollars deposited for our gold members. So basically, most financial firms charge you a percentage to keep your money there as a management fee. We're paying you a percentage to move your money with us. And these types of offers have really attracted people with much bigger accounts. We've had customers with tens of millions of dollars moving those accounts to Robinhood, and they've been very happy with the experience. So we have been adding capabilities to serve customers across the entire market, not just sort of in that middle tier, but also people with more money and people with less who are just getting started. We also would like to serve them and have been focusing on that demographic since day one.
And Vlad, when I talk to skeptics, they point out that you guys are heavily reliant on options trading, crypto volumes, and that driving the business. Paul mentioned the huge run-up over the last 12 months. It's still down 48% from the IPO price. What is the kind of mission in the next coming months and years for the company to get back to that IPO price and trade higher?
Well, I think we've been doing really well focusing on the inputs of the business. I can't really control the stock price directly, but if we're growing revenues, if we're diversifying revenues, if we're launching innovative new products for our customers, I think we can kind of grow through market headwinds and high interest rate environment and be sort of like a company that thrives in all conditions. And you mentioned the revenues and options trading and all of these things, but what's happened in the past couple of years is the revenue profile of the business has diversified as we've rolled out all these products. As of the last earnings report, several earnings calls, more than half of the revenue is actually net interest margin, not even transaction based. Right. So as we add more of these products, like the 5% yield on your cash, the profile of the business has also changed.
All right, Vlad, thank you so much for joining us. Really appreciate you coming into our Bloomberg Interactive Broker studio. Vlad Tenev, he's the Chief Executive Officer, co-founder of Robinhood. The news today, Robinhood unveils a credit card. And folks, it has some heft. This is a unique credit card. It's in a further push beyond the trading business there, and the stock performing very well there. We appreciate that. Right now, let's head back down to Baltimore, Maryland. We need to get just a heads up on this developing fluid story. Kaylee Lines joins us here from Bloomberg News, Bloomberg Television. She's been on the ground in Baltimore reporting on this very fluid situation. I see with the umbrella there, unfortunately, it looks like it's raining down there, which is not going to help matters, Kaylee, for the folks that are trying to recover these bodies. What's the latest?
Yeah, the rain makes it all the more difficult, Paul. It's not just rain, it's wind as well. The water is quite choppy, and already visibility had been low, and divers are having to essentially make sure they're going around what could be very large debris in the water as they are undertaking this recovery effort. We're about 5 hours into it now. It began at 6 a.m. Eastern time, and they are trying to recover these 6 souls, these 6 individuals, construction workers who were on the bridge when it collapsed, who are presumed to be dead at this point. But the governor of Maryland, Wes Moore, has been very clear he wants to provide closure to those families. So that is really the priority today. Is this recovery effort is being led by Maryland State Police in conjunction with other partners, including the Coast Guard. And of course, there are many other agencies that are on the ground here in Baltimore at the scene. NTSB, the National Transportation Safety Board, is also going to be leading the investigation into what exactly went wrong on the Dolly and ultimately resulted in the collision of the vessel with the Key Bridge. And that investigation is moving forward today as well.
Kaylee, what do we know about the federal response here, or the offer for aid from the federal government? What do we know? Because this just looks like it's going to be a huge undertaking, very long time frame as well.
Absolutely. Most immediately, we have seen action in the state legislature today, a draft put forward that essentially would provide some economic assistance to the thousands of workers at the port who are affected by the Port of Baltimore's closure. On the federal level, though, we are likely to see funding unlocked there as well. President Biden yesterday pledged that it would be the federal government that foots the bill for the reconstruction of the bridge itself. Of course, that would be a much longer-term effort, likely to take a very long time, and would require supplemental funding approval from Congress, which could take a bit to actually get across the finish line. And we have heard via a statement from one of the Maryland representatives, David Trone, who has said that he is working with his colleagues in Congress to get some emergency relief unlocked in an expeditious manner. So the mechanisms are there. Certainly there will be both state and federal funding that is involved here, and it is likely, as you allude to, Paul, that we're going to need quite a lot of it in the months to come.
All right, Kaylee Lyons, thank you so much for joining us, Kaylee. Kaylee Lyons, she's down in Baltimore at the site of that bridge collapse in Baltimore, giving us the latest boots on the ground reporting there. We appreciate that. Looking at the markets here, the S&P is up about 0.3%. The Dow's up 0.6%, 230 points. NASDAQ off just slightly off about 13 points, 16,300 on the NASDAQ. Let's dive under the hood and see where some action is out there in the equity markets today. We do that with Nora Melinda from Bloomberg News. Nora, what are you looking at?
Well, I'm watching Disney. Those shares are rising for the highest level since 2022. And this is coming after allies of Ron DeSantis finally reached a settlement agreement over who controls Walt Disney World's governing district. As you recall, Disney and DeSantis, as well as his allies, have been in opposition after the company opposed Florida's so-called Don't Say Gay law. And in response, DeSantis took over Disney's governing district and appointed a new board of supervisors. So this is really good news for Disney as they are reaching this settlement, especially as has been a point of contention for quite a while.
All right, so this is control going back to the company?
That's what it sounded like. It sounds like it says under the settlement, Disney will agree to revoke some of the changes that limited the powers of the municipal authority and were quietly approved before DeSantis' appointed board took over.
Okay, it's good news for Disney. I mean, again, Disney, when you think about Disney, the stock, it's having some challenges. It is at a 52-week high, the highest as you mentioned, but it had, up until this point, really been plagued, like a lot of media companies are, media stocks are, with the uncertainty associated with this switch to streaming businesses. But in response, Disney said, yeah, that's true, but we've also got a huge theme park business. And, that is a great growth story. And in fact, they announced last year that they were increasing their capital spending on their theme park business, really doubling down on the theme park business. So getting some news where you get some clarification in your biggest market, which is Orlando.
Right.
That's got to be good.
It's really good.
All right, good buzz. What else you got?
Let's look at Coinbase. That's ticker COIN. Those shares are down, pairing their decline, but slumping as much as 4.8% in trading today. A judge ruled that the SEC suit against Coinbase can now go forward. The SEC is alleging that Coinbase failed to register as a securities business. And of course, we know this to be a huge blow for crypto players who argue that the SEC has no power to regulate them because they don't traffic in securities that have to be registered. So this is really a pure win for the SEC, especially as we think about a lot of those people who are behind crypto and may think that they don't have to report everything in the same way that some of these other securities do. But those shares are declining this morning.
Yeah, stock's down about 2.3% today. It's had a great run along with the price of Bitcoin. It's up. Coinbase is up 50% year to date. It's up over 300% over the last 12 months. So riding that move in Bitcoin. I'm looking at Bitcoin here today, pretty much unchanged here, off a little bit here, 69,300. But it's had a big move higher on that spot ETF, kind of lifting all things crypto, including Coinbase. How about Merck? MRK is a ticker.
Yes, Merck has really been in focus this morning. Those shares are rallying for their highest level on record. Now, this is a Bloomberg exclusive. Merck won U.S. approval for a new treatment for a rare, dangerous form of high blood pressure. This is expected to be a huge hit for the company, especially as sales of its older drugs have waned. Now, this drug in particular will cost $14,000 per vial.
Wow.
It's expected to be taken every 3 weeks, according to the company. And at that rate, the drug should cost about $242,000 a year.
Health insurance, I mean, I'm not paying 20% of that.
I hope that our insurance is good enough to cover if we needed it. But some patients, of course, may require more. So $242 is what we're looking at for a yearly basis.
All right, the stock's up today. The stock's up 19.5% year to date, 25% on a trailing 12-month basis. Merck has a market cap of $330 billion. So I guess that the drug business is a good business indeed. All right, Norma Linda, thank you so much. We appreciate that. Norma Linda, she covers the equity markets for Bloomberg News, giving us some of the movers and shakers that are happening in the market here today. At the index level, the S&P 500 up 0.3%, the Dow up 0.6%. That's 245 points, and the NASDAQ is pretty much unchanged on the day. We're going to have more coming up. This is Bloomberg.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Hey, Alex will be back tomorrow. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Carnival Cruise Lines reported some numbers. They raised their full-year outlook amid a record-setting booking pace, but they also said that the collapsed Baltimore Bridge might have a $10 million negative impact on their cash flow and earnings for the year. Let's break it down with Jody Laurie. She covers all the consumer stuff for Bloomberg Intelligence. She's a credit analyst over there. So, Jody, what'd you make of the Carnival numbers? It seems like people are cruising like crazy here.
So I would say a few things about that, Paul. First of all, I would say that when you look at Carnival, it's really a cash flow story. It really is a credit story more than anything else, and the bookings are sort of confirming that. Now, the booking level, if you include short and long term, it's actually not at the peak, which was second quarter of last year, but it's right near the peak. And based on what management is saying, it sounds like second quarter of this year might top second quarter of last year. That said, I think more importantly, the company is starting to attack some of its debt load, particularly in some of its secured areas, which will help to sort of free up the balance sheet a little bit, provide some flexibility, make it so that the company has an ability to sort of make its way back to high-grade ratings as it's been targeting for 2026.
Yeah, Jody, you called that out. Just using the FA function on the terminal, Carnival Cruise, almost $32 billion in debt compared to a market cap of $21 billion. How does that stack up to the likes of Royal Caribbean or Norwegian and some of those other peers in the cruise liner space?
So, yeah, Carnival was able to bring down their debt load to about $30 billion over the past year. And it's likely that it'll probably end this year around that level based on what they're taking in terms of ships. That said, it is significantly higher than Royal. It is significantly higher than Norwegian. But on a leverage perspective, it's sort of middle of the pack at the moment as compared to Royal and Norwegian. Royal is a few quarters ahead of Carnival in terms of its deleveraging strategy. Management at Royal actually bumped up their narrative around getting to investment grade level metrics to do it earlier than 2025. And Carnival stuck to that 2026 number, which I think is descriptive of being a little bit more conservative, particularly with the backdrop of everything happening globally, not just the Baltimore Bridge situation, but also at the Red Sea and everywhere else that's affecting Carnival more broadly because of its more global nature.
I'm looking at, again, the FA function, as Bailey called out. I still see, $3-4 billion in CapEx every year. Are they buying ships, or what are they spending that kind of money on?
Yeah, the $3-4 billion of CapEx is primarily ship. There is a portion of it that is in terms of maintenance CapEx, right? Your ships get old, you have to update them every few years. You have all these sort of different requirements related to it. They also have that Celebration Key that they're rolling out on, which is on the Grand Bahama, and that's to rival their peers, which have been investing really heavily also into island presence, right? The Caribbean island presence is a moneymaker for all of them. It's this captive audience. They bring the people who are on their ships to these islands and to these sections of islands, like, not the whole Grand Bahama, but that carved out section specifically for Carnival, and wine and dine them, get them to spend extra money. That onboard spend is really where you see that margin.
You mentioned wining and dining. I just want to look at some of the other areas that you cover, talking about Wynn Resorts, MGM, Hilton.
All the fun stuff.
All the fun stuff. Yeah, you have the best job. I hope you take advantage of it. But when you look at the underlying business dynamics of some of the other areas that you cover, what are we seeing in terms of hotel demand and hotel sales and what that means from a credit perspective?
So hotel demands, hotel sales, it is a bit mixed regionally, but I think overall we're pretty optimistic about this year, and that's a function of the fact that business and conference is really picking up this year as compared to the past few years. We're at that point where that post-pandemic narrative has sort of played out, and we're getting to more normalized. That said, there are areas of expansion and growth. We're also seeing that all-inclusive area be a much more attractive area for a lot of these companies. And I think we are seeing some rivalry across the board when it comes to hotels, casinos, cruise lines as these destination opportunities. We're talking Las Vegas, obviously not the regional casinos, that's a little bit different. But Las Vegas, Macau, you know, the cruise lines and the hotels, there's a lot of sort of this destination narrative that's going on to get people to spend that extra money and to sort of go on vacation, live life to the fullest. Now, we do have these partnerships that are happening between Marriott and MGM, but then also we have an MGM and Carnival relationship. So there is this fluidity that's happening within my industry that makes it sort of interesting.
And you get a great view on the consumer, Jody, with you know, the coverage you have. Again, hotels and casinos and cruise lines. Where are people kind of spending their dollar? And it seems like they're still spending on that whole experiential thing, the experiences. What are the companies you cover? What are they saying as to how that's likely to play out?
So consumers are definitely spending still on experiences. We're still very much seeing it. Now, if you compare 2023 to 2022, it's a different sort of narrative than 2023 to 2024 because the base is much greater, right? If you looked at the base going back to 2021, you're dealing with nothing. Building on nothing, it's very significant. That said, there still is that narrative of growth and that consumer spending on experiences. Where we sort of wonder is what's going to happen heading into the second half. That's sort of the puzzle piece that isn't quite filled out for us yet, where first half into the summer season is very strong. We're also seeing that for cruise lines. They're saying that going into 2025, they're seeing strength. And that's a function of the fact that people book their cruises so far in advance. You don't get that benefit in the hotel space. You don't get that benefit as much in the vacation arena elsewhere. People don't book vacations apart from cruises so far in advance. So I think as we head into second half, we'll sort of get a feel for how comfortable the consumer is in terms of spending.
And Jody, I just want to ask about the Fed. If we do have higher for longer, and if a rate cut keeps dragging on, how does that impact the kind of areas of your coverage differently, whether that's sector by sector or company by company?
It's a combination of factors. So when you're talking the cruise lines, a lot of the narrative is around repaying and refinancing debt. That refinancing portion won't be as attractive if we're higher for longer. The other component, though, is on the consumer side. So you have the high-end consumers that might benefit or not from high interest rates or, you know, a elevated stock market price of sorts. But then you have the lower-end consumer that might feel a little bit more of the pressure. I think the more important piece is that inflation factor, where you say, okay, from the inflation standpoint, how much is the consumer feeling it? How are they feeling it directly in their wallet? And how much are they willing to borrow in order to continue that spending? And so I don't really know how that's going to play out. That's, you know, there are other people within the firm that are really very smart and can talk more to that. That said, that is something we are monitoring from the standpoint of how much the consumer is stretching, because that narrative around consumers having extra cash on the sidelines to pump into vacations isn't so much there, but the thought process around spending on vacations and that mentality around spending on vacations still exists.
All right, Jody, thanks so much for joining us. Really appreciate it. Jody Laurie, she covers all the consumer companies, all the fun companies. She does it from the credit perspective. Talking about Carnival Cruise, reported some numbers today, took their guidance up a little bit, citing, even though some concerns, a little bit near-term, short-term, small hit from Baltimore. Have you cruised before?
I'm not a cruise person.
So you're not cruising for the honeymoon?
Honeymoon, no. We are flying to Portugal and then flying and driving, renting a car.
Lise Mateo cruiser?
No, I haven't. I'm kind of scared. I don't know. Titanic comes to my head, and I'm like, I can't do it.
My thing is I don't like people. So that's kind of
that could be a problem.
That's a problem for me. So I mean, be stuck on board with like 3,000 people onto this ship.
Lisa says Titanic. I use the pandemic as like exhibit number 600 for me to not do it, and you're just like, I don't really want to interact with others.
I just don't like people. Yeah, so I don't need to see it. But I mean, and the all day, all night buffet. Not a big draw for me. You know, open bar might be something to discuss, but I mean,
that's a bonus.
But I don't know, people, Charlie Pellets of the world, I mean, swear by Michael Barr?
I'm a coucher.
Not a cruiser.
He's a coucher. All right, very good. So we'll see how that plays out. Carnival Cruise stocks up just slightly on the news here. S&P 500, not much happening in the market here. Up about 0.2%. The Dow up about 0.6%. 220 points on the Dow. 39,500. Nice round number there. We were on a 40,000 watch. We'll see if we can get back there shortly. Nasdaq down just slightly, about 22 points here. Looking at the yield space. 10-year Treasury, we're off about 2.5 basis points, 4.2%. If you want to go to the U.S. Treasury, you'll get 4.2%. Gold, it is up just slightly, 0.5%, 21.89. Gold's had a heck of a run. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, Daly, and Lisa. It's a port at a standstill with the collapsed Francis Scott Key Bridge holding all ships from entering or leaving the port of Baltimore. Maryland's Governor Wes Moore told ABC that the incident is likely to have national supply chain implications.
Those first responders, those law enforcement officials, those people who move quickly, it literally changed the entire dynamic of what that night could have been.
Governor Moore says 6 construction workers that were on that bridge are presumed dead. NTSB Chair Jennifer Hamady was asked about speculation the ship that crashed into the bridge lost power.
Everything from maintenance to even fire rescue operations. But we'll look at how the U.S. Coast Guard and others regulate operations and to see if there are any deficiencies.
NTSB Chair Jennifer Hamady spoke to CBS Mornings. Today, New York's MTA holds its final vote on enacting what would be the United States' first large-scale congestion pricing system. It would charge most drivers in Manhattan a toll of at least $15 to drive south of 60th Street. Supporters say it will reduce carbon emissions, speed up bus service and emergency response times, and raise funds for public transportation. Former New York Traffic Commissioner Sam Schwartz is in favor of the plan.
It's been a success in city after city that has tried it, reducing the amount of traffic by 15 to 25%. In some cases, they've taken advantage of that and have introduced more pedestrian space, bus lanes.
Critics say it should have included more exemptions. Pope Francis appeared in better health today when he walked into the Vatican Audience Hall on his own with a cane, delivering his prepared text with a strong voice. Recently, the Pope has often shown difficulties in walking and has been heard breathing heavily. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
events, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, it looks like investors a little bit cautious ahead of Friday's release of the Fed's preferred inflation gauge. Right now, NASDAQ is a little changed. The Dow is up about 0.5%. The S&P is up about 0.2%. Now, earlier I told you the biggest lift, it was coming from real estate. So let's see the other side of things. So of the 11 major industry groups, the biggest drag, that's coming from communication services. Then we go a little deeper. We see media and entertainment. Further on the hood, we see interactive media and services. And then finally at the top is Meta, followed by Alphabet's Google. Over to the bond market, we have the 2-year yield at 4.57%. That's down about 2 basis points. A 10-year yield at 4.20%, and that's down about 2 basis points. And before we go, some news surrounding Disney. Their shares are up about 0.5%, but it's ended its fight with Governor Ron DeSantis by settling that Florida lawsuit. It put an end to an almost year-long battle. That is your Bloomberg Business Flash. Paul and Bailey.
Yeah, that is good news for Disney. Who needs that kind of collateral damage there? Lisa Mateo, thank you so much. We appreciate that as always. We got Bailey Lipschultz sitting in for Alex Steele. You got me, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube, and we're also in your dashboard through CarPlay and Android Radio. All right, you're an emerging market portfolio manager, and you're putting up some huge numbers, but you're doing it a little bit, I don't know, not kind of the usual playbook. You own stuff like NVIDIA, Snowflake, CrowdStrike. That doesn't sound very emerging market to me. I don't hear Damian Sassower talking about that. He's trying to get me to buy like Gibraltar, sovereign debt or something. Ye Shea joins us. Ye Shea is a reporter for Bloomberg News. Has got the story here. So, what is Lewis Kaufman doing over there at Artisan Partners?
Hi, thanks for having me. Lewis Kaufman is a emerging market stock fund manager at Artisan. He caught our attention because his fund is the best performing emerging market fund over the past 5 years. It put out like a massive return, as you mentioned earlier. The annualized return was like 10% in an asset class basically going nowhere for the last couple of years. It's quite impressive. But as you mentioned earlier in the show, that he did something quite extraordinary because he loaded his funds with all these high-flying U.S. tech names, NVIDIA, Snowflake, CrowdStrike, and also Coca-Cola, Estee Lauder, all these names out there. In fact, that the U.S.-based companies make up 40% of his portfolio. And this is not a small fund. This is 3 billion funds. And if you're adding the European names, developed market exposure is more than 50% of his fund. And to put the number in perspective, that the median of emerging market funds typically have like 5% of non-EM exposure. So he did put up some big numbers, but also doing this in a very extraordinary way.
Well, I can say Lewis Kaufman, one of the reasons he's so successful is he got his MBA at Duke University.
Oh, well,
There you go. Very
Sweet
good.
16 team
Exactly.
while we're at it.
Exactly.
But looking at this, are there any guidelines from the SEC that would kind of make this a no-go zone?
There's SEC guidelines. Basically, they require the funds to invest at least 80% of the money in the areas suggested by their funds. So if you're a U.S. growth fund, you have to invest in at least 80% of your portfolio in these type of companies. But and last year they passed a amendment, basically try to crack down abuse of these names, especially in the ESG spaces. A lot of funds, so-called greenwash, they brand themselves as ESG funds. So the big funds have in the next 2 years to implement these changes. And the spokesperson told us that it's too soon to assess the potential impact on Lewis's fund. But their practices have very loose description of the areas they are allowed to invest. They are investing, the prospectus said the fund is intended to invest in economies companies have economic ties with emerging markets. So not necessarily the companies has to be based in the emerging markets. Apple, for example, they got a lot of revenue from China. So in theory, this is also fall into the category of Artisan Funds investment scope. So there's a lot of wiggle room you can make.
Yeah, I was going to say, Paul points to Damien. I wonder how Damien would feel if we called Bitcoin an investment in, I don't know, Tanzania, just because they have ties to it in mining. It feels like you can move the goalposts wherever you want, and it ends up working out. What did the detractors say? Like, I have to imagine people are kind of irked that this is the top performing fund, and he's loaded up in, for all intents and purposes, the best company in the U.S.
Absolutely. It's kind of divided, but I think the overwhelming sentiment, just by talking to all these advisors and also competitors, they think this is, some of the guys we quoted in the story saying this is actually disingenuous at best, because I wanted to invest in emerging markets, but if you have a large proportion of the funds investing in U.S. tech names, it's not really emerging markets, especially for these large institutional funds. So they have specific exposure. Say, if I have, I want to allocate 20% of funds in the U.S. developed markets, and that exposure is already have a lot of names in there, then if I invest in Luis fund, then I probably have overexposure to U.S. tech names and growth names. So that's why you don't see much of a flows, especially from the institutional side over the last couple of years, despite all these performance performing quite an extraordinary performance number they put out there.
So how much is he managing in this fund?
$3 billion.
Okay.
Previously, before joining the Artisan and established this fund in 2015, he also worked 5 years at the Sonberg. Had a similar fund at the Sonberg, and he also put up very big numbers, massively outperforming the benchmark. That's he got the attention from Artisan. They basically poached them from there.
How about the volatility associated with this fund? If you're owning NVIDIA, you're in for some volatility there. Is that something that he's acknowledged?
Absolutely. So the volatility of this fund is also that he has the best performing numbers, but also have the highest volatility. So high vol, high return, this type of things. So especially during the 2020, he returned 82% that year, given all these tech bubble, if you will, during that period. But in the next 2 years, they had huge losses and sitting at the bottom of the ranking. Then since the last year, the tech stock took off again, and he's outperforming again.
And is this something that you expect competitors to start mirroring? Because, I don't know, if I'm managing money and I look at big tech right now, I'm kicking myself for not coming up with some way to kind of blur the lines.
Right. I don't think this is I think they are quite unique in that perspective. Not there are many, like we talked to Morningstar, they told us, Luis fund, there's another big fund, which is quite big, like 50 billion fund from Capital Group. It's called a New World Fund. And they are the two funds have non-EM exposure more than 10% portfolio. All the other guys, they have quite limited scopes. So I don't think this is a trend, because as we mentioned, this kind of sort of like cutting two ways. You buy all these high volatility funds, you can put up very big numbers. But given the volatility, it's going to turn off a lot of people who just want a more stable performance. And the second is we discussed about the overexposure into some of non-traditional EM funds. So if I'm a big pension fund and endowment fund, I want a diversified portfolio. I probably won't put my money into the Luis fund and have just too much of exposure into the growth names.
All right, thank you so much for joining us. Yeshe, bond and FX reporter for Bloomberg News, talking about emerging markets fund that's putting out some pretty good performance, but doesn't really look like a typical emerging market fund. But I guess it's all in the eye of the beholder how you define emerging markets. Looking at the broader indexes here. The S&P 500, it's up about 0.3%. The Dow's up about 0.6%. What are you working on these days, Bailey, in your equity coverage?
I'm just focused on this Trump de-SPAC. That is taking up the last week of my life.
Heck of a performance there. DJT is the ticker. Lots of buyers out there for that. Stock is up again today. Looking at WTI crude oil, $81.50 per barrel. Gold, it's higher as well. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Robinhood pushing beyond trading. The company rolling out a credit card to U.S. consumers. CEO Vlad Tenev spoke about it earlier on Bloomberg Intelligence.
We didn't just want to launch another Me Too credit card. We really wanted to come in and do something special and really lead the industry. So it's really the best cashback rewards that we found in any credit card on the market, the best digital experience, and really the best design. We have a solid gold card that's basically a hunk of metal. It's extremely iconic.
Those shares are up nearly 3% right now. Dell is in the news. It revealed it had a steeper reduction in headcount than it had previously announced. The computer giant cut 13,000 employees over the last fiscal year compared to the 6,600 it said it intended to let go. Now, Dell right now, they are down about 3%. And shares of Carnival, they're lower after the company said it's seeing a $10 million impact from the Baltimore Bridge collapse, as a lot of its cruise ships use the port there. But there was some good news from its earnings. Bloomberg's Abigail Doolittle has that breakdown.
They did beat in terms of earnings. They put up a narrower loss than expected of 14 cents. EBITDA of $871 million was better by about $50 million. And they put up record revenue, $5.41 billion. All of this coming out of the pandemic. The revenge travel, adjusted earnings a little bit light, EBITDA better.
Now, that looks like that news starting to sink in a little bit. Their shares are up about 1%. Over to Merck. Their shares are higher. They're up about 3% right now after a treatment for a rare and dangerous form of high blood pressure. It won approval from the U.S. Food and Drug Administration. And Johnson & Johnson reportedly in talks to acquire a medical device maker. The Wall Street Journal says the company is interested in Shockwave Medical. That is your company news at this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
I'm trying to figure out who's still on my auto insurance. Lisa Mateo's got me wondering. So I got the app open. I'm filling through, see who I'm still paying for, see who's still on the dole. I'm trying to cut these people off. S&P 500 up 0.25%. The Dow up 0.6%. The NASDAQ off just slightly. So kind of mixed out there. Again, the Dow 39,500. With our news in New York City, here's Michael Barr.
Thank you very much, Paul Bailey and Lisa. From rescue to recovery, crews continue to search for the 6 construction workers who were on the Francis Scott Key Bridge when it collapsed overnight Tuesday after a cargo ship hit a support. Bloomberg's Kaylee Line says one of the more difficult jobs for crews is getting what remains of the bridge off the cargo ship that crashed into it.
It's going to be a very difficult effort, and likely there will be a number of different groups and agencies involved at both the state level and the federal level. We know that Maryland State Police are really overseeing the recovery effort underway today, but they're working in conjunction with the Coast Guard. The Army Corps of Engineers also will be key to this effort in trying to get the debris out and ultimately the reconstruction as well. So it's a lot of different moving parts working in cooperation together, but we have heard from authorities, including Governor Moore, that so far those cooperative efforts have been very supportive of one another, and they will continue to cooperate.
Bloomberg's Kaylee Lyons reporting from the site of the collapsed Key Bridge in Baltimore. An appeals court extended a pause on a Texas law that would let the state arrest and deport people who enter the country illegally, giving the Biden administration a win in a fast-moving legal fight with sweeping implications for U.S. immigration policies. Today, New York's MTA holds its final vote on enacting what would be the United States' first large-scale congestion pricing system. The plan would charge most drivers a fee of at least $15 to drive south of 60th Street in Manhattan. Danny Pearlstein is Policy and Communications Director of Riders Alliance, which is in favor of the plan.
For every one low-income worker who will pay the toll, 50 low-income workers in New York City depend on public transit. It is an overwhelmingly progressive policy.
Critics say it should coincide with a bigger commitment to improved mass transit service and should have included an exemption for city employees assigned to work in the congestion zone. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Bailey, and now John.
All right, Paul.
Yes.
GLP-1s, Ozempic, top of mind for Matt Miller.
Yes.
These
Why?
drugs,
I have no idea. The guy's
he doesn't need to lose weight, but
no.
he wants to lose weight.
Okay.
Novo's $1,000 diabetes drug can be made for under $5 a month.
Nice margin.
Exactly. The low end of the manufacturing costs for Ozempic, according to figures from research at Yale and King's College, as low as 89 cents. This is a company that has added billions upon billions of dollars in revenue. Gross margin, profit margins, 85%. What a what a drug.
Now, is
place.
insurance paying for this? Where are we on the insurance? Because that's the big thing,
Yeah.
right? I mean, I'm not sure every insurance plan is paying for this stuff.
No, I think it depends on what you need. So it's being catered to diabetics, or if you can get some kind of coverage through that. But the big thing with all of these drugs, and really kind of drugs in general, is the ability to kind of who kicks the can. I don't know. You're not Medicare age, right?
No.
I know my pay.
Easy there, pal. Easy.
Well, I just know my mom now is on Medicare.
Yeah, right.
And these prescriptions she couldn't get written before she went on Medicare. Now it's like, she's like, I'm getting prescribed everything. I want my shoulder hurts, go get an x-ray, get an MRI. She's like, before I couldn't wait.
Well, now, I mean, I have a friend who got a prescription for Wegovy.
Okay.
But can't get anywhere. This is not around. So we got like orders into the CVS's all over the state of New Jersey. Nothing happened.
And I remember a few months ago, they were really trying to produce it for the U.S. market, I think because we're more willing to pay top dollar and people
And we're
out of
heavier.
pocket.
Yep.
And travel. Talk about flying through the Midwest. You're kind of...
Yeah, well, I just think in general the U.S. has got that issue. So it's going to be... And Bloomberg Intelligence has done a great report on the GLP marketplace, sizing up the marketplace, and just the numbers are astronomical. And of course, the big market is the U.S. Coming up, Balance of Power from Washington, D.C. Joe Matthew is going to bring us the latest from Washington, D.C. Balance of Power. Joe Matthew, that's coming up right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
America's mission to protect shipping in the Red Sea is not working. Welcome to the fastest show in politics, as Houthi attacks on shipping continue despite the efforts of the U.S. Navy. We'll talk about it with Bloomberg defense reporter Peter Martin, who just returned from the region. Retailers are enjoying fatter margins as inflation comes down. Could be a big problem for Joe Biden and his re-election chances. We'll discuss with Bloomberg's Molly Smith here in Washington. Later, we'll check in with Bloomberg's Kayleigh Lyons at the site of the bridge collapse in Baltimore. And as the president hits Donald Trump on abortion, a Democrat wins a special election in Alabama after running on the issue. We'll have analysis from our signature panel. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors, all after a look at Wall Street. For that, we get to John Tucker in New York. Hey, John.
Hey, Joe, the major stock averages right now, they're mixed. The S&P 500, it's up. 9 of the 11 major industry groups in the index higher. Utilities, the biggest gainer, and communication services and information technology, the biggest drags. That's technology. NVIDIA shares among the laggards, down right now over 3%. And then Meta Platforms falling over 1%. Meantime, Keith Lerner at Truist Advisory Services says, you know what? History is making a bold case for stocks.
It's been an extraordinary 5 months. I would say just looking back as a starting point, when we've seen 5 months of gains of more than 20%, we've only, or where the cumulative gain has been more than 20%, we've only seen this happen about 10 times since 1950. And a year later, you've been up every time with average gains of double digits.
And according to Goldman Sachs Group, NASDAQ, with the stocks set to cap another strong quarter, pension funds are likely to sell an estimated $32 billion in stocks to try and rebalance their positions. S&P 500 right now 12 points higher. That's up 0.25%. We're at 52.16 on the index. The Dow Jones Industrial Average up 201 points. That's a rise of 0.5%. 39,483 on the Dow. And right now, the NASDAQ Composite Index 6 points lower. As far as Treasuries, 2-year yield, that's the more policy reactive. That's down 3 basis points. We're at 4.55. The 10-year, the benchmark, 3 basis points lower. That is at 4.19. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues and your guide for a very complex world, Joe Matthew.
John, thank you. How right you are. We'll get back to John Tucker for an update on trading a little bit later on this hour. Welcome to the Wednesday edition of Balance of Power. It's almost a little Friday with a shortened week here, at least in terms of markets. And boy, people are pretty scarce here in Washington with lawmakers out for a 2-week recess as we consider what's happening in Baltimore. We'll connect a little bit later on this hour with Kaylee Lyons, who is back this day after at the site of the bridge collapse. And an opportunity now to focus on what's going on the other side of the world, and a fascinating bit of reporting from Bloomberg's Peter Martin. The headline says it all. The no-fail mission to protect the Red Sea is not working. Peter just returned from a trip to the region, as I mentioned, and spent time on the USS Eisenhower, which is leading this carrier strike group to try to protect shipping in the Red Sea. That's why they are there, yet the attacks continue despite spending a lot of money and shooting a lot of cruise missiles at targets in Yemen. It's been pretty quiet, though. And we've even been hearing that this is going pretty well since we're not hearing so much about the attacks. But the facts are stubborn, as we read in Peter's piece. The number of vessels sailing through the southern Red Sea is down still 70% compared with the start of December. Container shipping has dropped 90%. Gas tankers have also all but ceased transit. Peter, it's great to see you. I really appreciate your coming in. What an adventure you had to see all of this up close. These numbers are stark. That would suggest that we haven't made a dent in this problem.
You know, the Houthis have a lot of material which the U.S. says is supplied by Iran. They have missiles which continue to come in on these small boats across the Red Sea, across routes supplied by land. And so they're able to keep going for quite some time.
It's kind of amazing that we haven't, based on some of the reporting we've heard from the Pentagon, made a bigger difference. We've expended quite a bit of firepower at going after targets, in some cases mobile targets, preemptive strikes, we're told, in Yemen. Have we at least slowed down the attacks?
So Pentagon officials do say that they've seen the pace of the attacks slow, and they've also seen a shift in the kind of tactics that the Houthis are using. So, for example, early on, they were flying drones high up and using them for surveillance and reconnaissance. Now they're flying drones straight at targets in the Red Sea on one-way missions to disrupt. And the Pentagon sees that kind of adaptation as a sign that maybe they're running low on some of the missile stocks.
They're still just as aggressive in posture, though. What are they getting at, by the way? What's the aim? Is it to sink a ship? Is it to get us out of the region? Obviously, that's not going to happen.
So the Houthis say that their aim is to act as the voice of the people of Gaza. And they say that their attacks will stop once the war between Israel and Hamas stops. The truth is, I think, though, that they have a lot to gain politically from this. If you look back to before the October 7th attacks, there were anti-Houthi protests in Yemen. The parts of the country they can control were not being especially well run, certainly not doing well economically. But these, October 7th kind of gave them a cause. It gave them a chance to step up and say that they were the voice of the Arab street, and that's worked out pretty well for them.
This is a big PR campaign in the end. They don't care about sinking a ship just as long as they're in the headlines.
Well, if they can get headlines by sinking ships, and score some points against the U.S. too, all for the good for them.
How has our strategy evolved, if at all? You were on board an aircraft carrier, and so you're seeing a number of different platforms. They can shoot cruise missiles from ships, from destroyers. They can obviously launch fighter jets like you saw with air-to-ground attacks. Right. Does it remain all of the above? Because the criticism has been, we're lobbing million-dollar missiles at these very cheap drones that at some point is going to be a problem for the Navy.
It's very expensive. The price tag goes up every day. I did ask on board the ship about whether cost is ever a consideration, and they said no, they're focused on mission. Until Washington tells them to spend less money by using cheaper systems, they're going to focus on what accomplishes the mission best. And, U.S. officials say that freedom of navigation, freedom of commerce is a core U.S. interest, and they're going to keep fighting to defend that, even though the price tag is pretty high.
Does that battle group stay in the region until the Houthi problem is solved, until the Gaza problem is solved, or both?
I think it's all of the above.
They first went there because of October 7th, right?
That's right.
Yeah.
They left Virginia thinking that they were going to do a bunch of Mediterranean port calls, which has not worked out the way that they hoped. And they're going to need to stay there until the Houthis either run out of missiles, change their mind about what they want to do, or there's peace in the Middle East. And anyone who has watched the region for a long time knows they could be waiting for a while.
Yeah. Having spent a minute on an aircraft carrier, it's a remarkable experience to be in this floating city.
Right.
You've got 5,000 people living on that ship. Peter, what was morale like?
I would say morale was pretty good. People are tired. A lot of people working 12-hour shifts day in, day out. They have a leadership team on board which is very dedicated to improving morale, stressing the mission that they're going after, stressing why it's important, why it matters. So it seems to be holding up for now, but I do think that they know it can't be held up forever at this pace.
And they have no sense of when they're ending this mission.
Not just yet.
The no-fail mission, as you call it in your great reporting. Peter, thank you for coming to talk to us. Welcome back home. Peter Martin, in a great piece that I encourage you to check out on the terminal or at Bloomberg.com. It's not just great reporting, but also loaded with images from Peter's visit to the USS Eisenhower, which is just a remarkable thing to witness. All of this, of course, comes down, again, to shipping. It's not just the conflicts in Gaza. It's the flow of shipping, it's trade, and it comes down to prices, because as they continue to steer around the Red Sea, and we've got a lot of them here, as I mentioned. Container shipping has dropped 90%. Gas tankers have ceased transit. They've got to go somewhere. It adds time and money, and it ends up being inflationary, as we've discussed before with Molly Smith. It's just yet another problem for the Biden administration when they think about unwinding supply chains and something like this happens. Add a bridge collapse in Baltimore, and we can keep talking about this. Now, I mention this in part because Molly Smith is in Washington, typically covering the indicators and the data from New York. She's with us here in the Bloomberg DC Bureau, and it's wonderful to see you.
Welcome is. What a treat.
To Balance of Power.
On the desk.
Well, yes, here at the desk. Great to see you. We're talking about inflation with kind of a reference to every possible story, whether it's geopolitics, whether it's supply chains, whether it's supply and demand or a Fed conversation. And you've been helping with some reporting here that people are going to read about, that disinflation is the word of the quarter in retail.
So they say.
So they say. They've seen some goods prices come down. They're keeping their retail prices even. So fatter margins for retailers, bad news for Joe Biden, because when you go to the store, you don't see a difference.
Well, that's exactly the issue that Biden and many Democrats have been arguing really for years now, this concept called greedflation.
Greedflation.
Yes. Well, they actually were arguing it more when prices were going up, that companies would then charge even more so than needed to offset those rising cost pressures and taking advantage of inflation that way. Now it's moving in the reverse, that even though prices are easing for some of these key input costs, they're still keeping the prices charged to consumers high. So keeping the margins elevated in that way. So economists will kind of go back and forth as to like whether this argument is valid, as to whether is this a really main driver of the overall inflation we're experiencing? Probably not. But is it contributing at the margins? Yeah, maybe so.
Yeah, it's kind of like what we experience at the gas station, right? The prices tend to go up real quick and take a long time to come back down. The problem is folks like you who look into the future here a little bit and study the data don't see that as a continuing trend necessarily. That's why we've got interest rates higher for longer, right?
Exactly, right. So if you look at the disinflation that we've seen in the last almost 2 years, it's pretty much entirely come from goods, like, you know, things that you buy, like stuff, like furniture, like clothing, things that you can actually pick up and touch, like this keyboard, et cetera. Versus, and so it's a good side on one and energy on the other. But those two things aren't really falling as much anymore the way that they had been for the last 18 or so months. So that's the concern now looking forward. And Fed officials, including Chair Powell, have flagged this as well, that they're wondering how much more room there is to run on this goods disinflation story.
Right. So, you know, you hear a lot about last mile. Do you roll your eyes at that? Is that like an easy cliche? How come the last mile is so hard?
No, I think that's really valid. And that's what we've been talking about, really, this whole disinflationary journey, getting from 9% up in June 2022 down to hopefully what will be 2% in the next year. But it's really hard to cut it in half and then in half again. So coming down from, that area and 8 to 9% down to 4%, that was what was called the easy part. That was what we saw with a lot of the supply chains healing, helping out, doing a lot of the work for the Fed on the energy side as well, with those prices coming down. The harder part now is the stickier parts of inflation, like services, with all of us still wanting to travel and go out. I was just at the Miami Open last weekend to watching a tennis event. Lots of people there spending on entertainment.
Yeah.
People still want to live their lives,
So
and that's
what
the
is
hard
that,
part.
though? You can't get a table at a restaurant, at least in a place like Washington or New York. We're the elitists experiencing, I guess, the benefits of this economy that won't seem to quit. But it's not just here. Like you said, book a ticket on an airplane. Is that still COVID savings? Is it just the fact that the job market's doing well?
I think it's a bit of both. Granted, the COVID savings are certainly waning.
You'd think so, yeah.
Yeah, that's certainly been a big... I feel like you can talk to 5 different economists on where are excess savings at, and they'll give you 10 different answers.
Well, that's true. We've heard some ring the bell to say, you know what, we spent it all. There's none left. And then years later, you hear that it's still, in fact, driving some behavior. But we've also seen wages go up quite a bit, too. So I wonder how that plays into it. The fact is that this revenge travel thing, I still think, is real. Whether we have the money to do it or not, people are still, I think, responding to that pandemic in some ways. When they have the opportunity to do something, they take it.
Yeah, a lot of these plans were, that we put off during COVID were longer term things that still could be playing out now, like, 2 or 3 years later, like booking a trip to go away for a long weekend or longer than that. People still catching up on weddings that didn't happen then, on other kinds of, big life events, buying homes. So a lot of this is still probably playing catch up to some degree. And as well that people are moving on. I mean, this whole concept of maybe the economy, we're not having a hard landing, it seems like. There's really no sign of a recession. Maybe we're not having a soft landing either. It's more this concept of a no landing where the economy just reaccelerates and moves on. And I think that's a lot of people more are conjuring around that idea now.
Well, reaccelerates makes me think that second half of the year could be a different world for the Fed then. If this is what we're looking at, maybe interest rate cuts are just further away than anyone believes.
Probably more. That could be one idea. I mean, certainly the Fed wants you to believe that. They don't want the market to get ahead of itself. Yeah. But there's also a big difference between the economy reaccelerating and inflation reaccelerating. So it is possible, and this is what the Fed is hoping for, that growth can be sustained without a pickup in inflation. And a lot of that comes from the supply side being back in order to support the demand that's obviously still here.
I know there's a term for it, but Joe Biden's made a big deal about the smaller portion sizes. You buy a bag of chips. Shrinkflation. Thank you. So I knew you would say on that. He's made that part of his stump speech. He talked about it at the State of the Union. He had a video on social media with a bag of potato chips. Does that get worse as retailers are pressured to follow prices lower?
I mean, I'm not a retailer, but I can see the argument for it. No, of course not. I mean, there's also the idea as well that you kind of see this in housing a little bit too. I think we've seen data that average new homes are actually being built with less square footage. So, how about that? Yeah, it kind of can go in multiple ways there.
Shrinkflation. Not to be confused with shrink, which is a whole other problem that retailers are facing. I love the jargon. I have to ask you about PCE is on Friday.
It is.
That's actually a pretty big deal for the Fed.
Yes. So some of us will not have Friday off.
You're one of them.
We will be working, yes. Wow. We will give you all the news.
Short straw.
Yeah. But, hey, when it comes to the big inflation report, that's kind of our Super Bowl.
Well, what are we looking at? What's the expectation? Do you know off the top of your head?
Yeah. I mean, it's going to be it's going to be a reading that probably will make the Fed a little uncomfortable, but they are obviously well aware of a lot of the inputs that go into PCE we've already seen so far. So a lot of economists have really already firmed up their forecasts and have a good idea of what's coming. So we've already seen a lot of the other data point to strong price pressures in February that will probably still continue. This report is for February, which seems like ages ago now.
Yes, right.
But I think they will probably be prepared to look through that and just, be more prepared for what's to come.
You'll hear about it here, of course, on Bloomberg. We will actually have live special coverage. PCE data, 8:30 a.m. Wall Street time, again at 11:30 with remarks from Jay Powell. So join Nathan Hager and Michael McKee here for that. Big thanks to Molly Smith. Get home safely. It's great to see you in Washington. And we have an important headline here. This is going to hit you hard, Molly. Hold on. New York's congestion pricing toll approved. We'll have more next on Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with the Bloomberg Business Flash. We're approaching the end of the quarter, and that matters because there's a degree of portfolio realignment, rebalancing that's taking place. Some investors wondering if the recent rally has legs. S&P 500 right now is holding on to gains today. The last 2 days of trading, it's worth noting that stocks pretty much gave up their gains in the final half hour of trading, so we'll see if that comes to fruition today. Coming under pressure, some of the tech stocks, that includes shares of NVIDIA. Right now, they are down 2.7%. Fisker, this is the electric vehicle maker, dramatically reducing the price of the Ocean Sport utility vehicle, its only model. The electric car maker struggling to stay in business at this point. And yeah, the fundamentals do matter. GameStop shares sliding after the video game retailer reported fourth quarter adjusted earnings per share and net sales that missed the consensus estimates. Right now, overall, the S&P 500 up 14 points. That's up 0.3%, 52.18 on the index.
The Dow Jones Industrial Average up 198 points. That's up 0.5% right now. And the Nasdaq Composite Index, 2 points higher. As far as treasuries, the 2-year yield down 2 basis points, 4.56 there. The 10-year, about 3 basis points, I'll call that. That's lower at 4.20. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Now, back to Balance of Power with Joe Matthew. As Joe, I look for my wallet because I think I'm going to be that much poorer in the months ahead.
Well, so stay with us for a second here. Bring all of us south of 60th Street, John Tucker. You park, if I have been listening, and I'm a loyal listener, if I've been listening and remembering correctly, you park around 57th Street, which is going to be a problem when you have to pay $15 to go south of 60th. Can you tell me exactly how this is going to work?
I park right at 59th Street, and right
59th Street
at 50 feet away. They've already erected the infrastructure to charge us more. Those of us that come in the middle of night into work and don't have a choice because there's no mass transit available for people like me who come in from other states like New Jersey and have to pay a fortune in tolls. So, I got to find a new parking garage, and then I have to find a new route. So, like, go way up to Northern, add another half an hour to my route to try to avoid all this. So, it's costly.
So there are thousands of people like you reevaluating their lives right now, and I'm sure that parking will now double north of 60th Street, right? Because everyone
it's a fortune
needs to be there.
And there,
so here's what I don't understand: what if you live south? If you live south of 60th Street, are you good? There's no toll as you go south.
No, the toll starts at 60th Street, and the district that is below 60th Street in Manhattan, all the way to the southern tip of Manhattan.
I understand.
That is now under the guise of the Metropolitan Transportation Authority.
Wow, this is wild.
One of those authorities that you really love because of the instilled institutional arrogance of these authorities. But
well, I know you're
I
a
digress.
big fan. What does this mean for taxis and Ubers? They're going to get more expensive too?
There are carve-outs for different people, different cars, different whatever. City employees who drive city cars, they're exempt. Also, one of the commercial bus services, the Hampton Jitney, that takes rich people, I'll say, out to the Hamptons, their summer homes and whatever. They're exempt because they need that, right? Anyway.
Journalists are exempt?
I haven't heard that one. I'm just looking for the exemption for the guy who has to come in the middle of the night because nothing else is available.
Yeah, right.
So we'll see. I should point out, Joe. Joe, my tolls now, without this added toll, are more on a monthly basis than the mortgage that I pay. I'm just going to throw that out there. That's falling on deaf ears.
And you're not going to be refinancing anytime soon. Just to be clear, they hit your Easy Pass on this, right? If you don't have an Easy Pass, they take a picture of the plate and mail you a picture.
Oh, you should see these things they put up. Digital cameras, they're going to take a picture of everything. And if you try to cover up your plate, you're going to get nailed with that one, too. And I should point out, it still is going through the courts. This great state of New Jersey, where I live, has taken the MTA to court to try to stop this. They'll get an injunction, and eventually it'll be decided. They're arguing, among other things, that's a violation of the Interstate Commerce Clause and that we already pay significant tolls to the Port Authority to get.
Can we have John write the story for the terminal, for crying out loud? I think he should own this story. If you're with us on YouTube, you're seeing the images of these Orwellian things. It's 1984, John Tucker. Thank you for sharing part of your misery with us today.
You got it.
Yeah, we'll check in with John a little later to get up to date on trading. I told you we heard a big thud south of 60th Street this morning. We'll let you know how this goes. Wendy Benjaminson is with us in Washington now. Of course, Bloomberg Politics editor with a lot to talk about. I bet you didn't think we'd be hitting this today. Thank God we live in Washington, I guess, is the answer here, right?
Well, yeah, except you and I were just talking about the tolls at least in Virginia.
We get
coming in
the
from
express
Virginia.
lane tolls.
Yeah.
Those are like elitist tolls, though. Like, he has no choice but to pay
well,
that
there
toll,
is that. I wonder if there's a carve out for Donald Trump's limousine to get from Trump Tower to 40 Wall Street. Do you
that's
think?
a great great question. If he were to be president again, does he pay that toll every time he goes down to Trump Tower? We'll find out. Well, no, that's a whole other fascinating story, and we'll have more for you on that throughout the day, I suspect. It just happened a short time ago. Joe Biden talking about abortion on the road last night, reminding us that this is going to be actually a central theme of his campaign. We've been talking about inflation and pricing and geopolitics for the balance of the hour so far. But as arguments are heard in the Supreme Court over mifepristone, the president has a whole new reason to kind of reignite the base, doesn't he?
He sure does, and he needs to. If you look at the results in a race I never would have thought I'd be reading about this morning, a state house seat
I'm really
in
glad you're bringing
Alabama.
this up.
Yeah, I mean, Democrats, flipped a state house seat in the suburbs of Huntsville, Alabama, largely on that IVF ruling banning the destruction of frozen embryos, and largely on just the whole notion of reproductive rights. And so Arizona also looks like it may have an abortion item on the ballot, which could drive Democratic turnout. This ruling on the abortion drug, I won't even try to pronounce it as well as you did. And Donald Trump is taking a really interesting position, which is not to ban abortion, as many Republicans are aiming to do in the wake of Roe being overturned. But isn't he settling on a 15, 16 week?
Well, that's a big question right now. He said on a recent interview that he was going to have an answer soon. He was going to have a number, which really seems to me like, he's potentially pigeonholing himself on an issue that he could very easily kick to the states like every Republican.
Right, he could.
Is doing now.
Or if he settles on a 6 to 8 week ban, he's going to be in the same camp as the very conservative Republicans, of the Freedom Caucus types. If he settles on a 15 or 16 week ban, which is what much of Europe, Western Europe has.
The Lindsey Graham sort of camp.
Right. Then that leaves an opening for suburban women, urban, rural women, and independents to go, yeah, I could live with that, if they had many other reasons to vote for Donald Trump instead of Joe Biden. So it's actually kind of a genius ploy on his part.
Isn't that something? Yeah. Well, I guess we'll wait to hear from him, although we've waited to hear about health plans and a lot of
Infrastructure Week,
that never necessarily emerged. It's interesting you mentioned infrastructure with what's happening in Baltimore right now. This appears to not be an infrastructure story, at least in the way that you might think, obviously, like this was an aging bridge that was falling apart.
Yeah.
The fact that it was struck by this cargo ship is the reason why it collapsed. But the administration is still being tested on this. Pete Buttigieg has been at the scene. Joe Biden is being called to the scene. We'll see if he shows up at some point. Not that he's going to make a difference by being there, but he wants a lot of money on this. And the Republican refrain right now is Joe Biden just bought a bridge in Baltimore and he wants you to pay for it. How is this going to pass Congress?
That is going to be very, very tricky. I know that the Maryland delegation is already working its friends and perhaps enemies to try to see if they can get some money for this. No, this is not the image that Joe Biden would like people to see, a bridge completely collapsing and tangling up supply chains. That's a major port in Baltimore. But the... one argument Democrats could possibly make is that you said you wanted to spend money at home instead of sending it overseas. How about we spend some money on fixing this major bridge? Republicans will almost certainly try to put this on Joe Biden as if the bridge accident were his fault.
The Minnesota bridge collapse in 2007 was quickly followed with unanimous approval to bring emergency funding.
2007.
So you just answered my question. We're just in a different world now.
We're in a totally different world. I guess that was George Bush, finished with lame duck president, had a Congress that was willing to work with him, and we are smack dab in the middle of an election year. I don't know if it's going to happen or not.
Sure. He's got a lot on the line at the moment. People have referred to, including myself, East Palestine, where a presidential visit would have only complicated likely that recovery. But it's an opportunity to criticize. Every president goes through this. Does he show up in Baltimore in a week or something?
Yeah, he probably should.
Does he meet with the families of these 6?
Possibly, unless we find out, a lot of the construction workers, there is some reporting that perhaps they were migrants. He might want to make sure that that won't cause him a political problem, depending on their status. But the East Palestine thing, sure, I can see why they wouldn't send him while there were all these toxic fumes poisoning this neighborhood, why add, more danger to him. But he had a long time to go before he showed up. I think he went a year.
It was a year. Almost to the day, yeah.
Later. I think in this case he probably does need to show up sooner. It's not, the bridge is closed. It's not that people are trying to commute around his motorcade or anything. Right. He could do a helicopter thing over it or something and talk about the need to spend money to fix this.
It's kind of next door.
Yeah.
That's what'll happen. He'll drop the supplemental emergency request when Congress comes back and do that. Maybe if they're at a visit.
Right.
When that happens, we'll have you back.
That's great.
Always love spending time with Wendy Benjaminson. Great to see you, as always. Bloomberg's best here on Balance of Power, including Nancy Lyons, who brings us up to date right now in world and national news. Let's do that before we assemble our panel in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, thanks, Joe. The search in the Port of Baltimore has shifted from rescue to recovery, with little hope that the 6 construction workers who are missing will be found alive following yesterday's bridge collapse. Maryland Governor Wes Moore has a message for the families.
Now that we've transitioned to the recovery phase, my promise to them is this: I will devote every single resource to making sure that you receive closure.
Governor Moore says there will be a full and thorough investigation for what caused both the power outage and the lack of steering ability ahead of the ship's collision with the bridge. NTSB officials say they will be downloading information today from the vessel's data recorder. Well, you've heard it here. The country's first ever congestion pricing toll is moving forward after approval today by New York's Metropolitan Transportation Authority. Congestion pricing will charge motorists a toll driving into Manhattan's Central Business District, which runs south of 60th Street. Drivers could begin paying the new fee as soon as mid-June. The MTA plans to use the estimated $1 billion a year of new revenue from the tolls to modernize subway signals, add more elevators to stations, and extend the 2nd Avenue subway into Harlem. A federal appeals court is refusing to lift an order that blocks Texas from arresting and deporting migrants suspected of illegally crossing the border. Global news 24 hours a day, whenever you want it, with Bloomberg News Now.